Hey, trader friends, welcome to the show. It is a bright and sunny Tuesday, 17th of June, and we're here with Woody.
How are we doing? Good morning, Ant. You all right?
Yeah, really good. I feel really honored you're here. Is it on your birthday?
Birthday yesterday.
Wow! Amazing morning, everyone. Welcome to the show. It's Woody's birthday. It was a couple of hours ago.
Yeah, my last one with a 3 handle.
Ooh. Lots of people here chiming in, saying morning. Good, happy birthday to you as well. Carlo, Steve Davis, Julian, Parky 1977.
Yeah, some good wishes out there as well for Rich and his man flu. What's going on, man? The man's been struck down.
Yeah, he has been struck down
prime.
since Friday. In his prime. All those vitamins and sprays on his
maybe there was too much
his desk.
Yeah,
not helping.
maybe too many decaf teas.
What is it? Lion's Mane is the other one. I hope he's listening to this. There's plenty to get across here. Of course, let's start with the futures.
Yeah, so all a bit of sea of red this morning, actually, after we had that kind of nice rise yesterday. So we've got the FTSE down about 0.5%, currently around 88.30. We've got Wall Street off 150 points, Germany 180 points lower. So I don't know if you saw yesterday, we had Axel's trade of the week out on DAX, and he was saying it was a bit of a risky one, but the chart was sort of saying it's going to do a little retrace. And to be fair, it did. We had that nice rise yesterday. But overnight, there's been some commentary from Mr. Trump, sort of urging people from Tehran to potentially leave, which has obviously led to increased fears, tensions, etc. But there's a bit of a, well, I guess as you'd expect as these things play out, there's a bit of a pulling and toing and froing in the market, whether that's equity market or more, more acutely like the oil market. So, we saw it pull back. We then saw it jump 2% overnight.
Yeah, let's have a look at that.
$70. So if you bring the chart onto screen, you'll see.
Here we are. Yeah, so I'm going to show you the 5-minute chart, trader friends, here to illustrate what Woody was talking about. Lots of volatility. There is, you said, Woody went down, then jumped back up again.
Yeah, I mean, if you scroll on your chart to about 11:30 last night.
So 11:30. Yeah.
We were sitting down at sort of 69.70 for a while. So down there for a good half an hour or so, and then at 11:30, it's it looks a little bit like what we saw early Friday morning with that just non-stop sort of green bars heading back up, and that's on that commentary there from Trump taking it back up to $72. And then again, it's given away and kind of come back to where we were again, down at 70. So I think there's been some kind of ceasefire talks, G7 meetings urging de-escalation, et cetera, et cetera. So
what's going to be key is until we have anything concrete, right? At the moment, it's just talks. Talk is cheap. And we also have reports that lots of diplomatic efforts are underway behind closed doors. Trump reportedly directing his team to have direct talks with Iranian representatives, looking for some sort of deal for a ceasefire. But we haven't had any more details on that just yet. Trader friends, any of you in the know with inside knowledge, or any of you who have live reports on the ground, please let us know here on the chat. We are going to go quickly to what's coming up. Let's bring up the screen. Right, Woody, take us through what is.
So we've got overnight action, and then we've got the opening bell at 8 o'clock. And then you'll be speaking to Dylan at 8:15 with trading experiences. And then 8:35 you're on with Matt Arbour.
Cool.
Vol and shares desk.
And then I'll take you through all sessions, my favorite part of the show, and also one of the best, I think, products here on IG, because you get to take a position ahead of the US cash open. Nick Batista will have a play out of that. Loving that circle, producer Phil. Is that new? No, the play out circle. Nice. with Rich McDonald, and also we'll have Piers Buckworth here with me to talk tech.
Nice.
Everything AMD, Tesla included too. He's a big Tesla fan, so Monkey Man, listen up. But also Nvidia and the like, right? Happy fine, saying happy belated birthday, Pete.
Thank you. Thank you, Abby.
Paul Shrimp Fred, welcome. Jugga, Guten Morgen, how are you? Right, let's head to overnight action. Stay where you are because this is just a short sting. Right, welcome back to Overnight Action. Of course, the big and only party in town, what everyone's talking about is, of course, the reaction as the Middle East conflict continues. Wardy, I've got the CNBC page up.
Yep.
Because it has this, really cool chart here. We knew that gold was already edging higher. And we knew that it was shining because of these uncertainties. We talked about this last week already, and this all comes on top of spot rising some 30% in 2025. But this just illustrates some
chart really, and I think it's a good illustration for all sort of traders and investors of going, just because you think something's high doesn't mean it's the time to sell it. When there's momentum behind it, it just keeps going and going. And when we got to the 3,000 mark, I think a lot of people thought it's topped out. It won't go much higher than here. And this is really proved that was just sort of springboard. And as things, traditionally it's a defensive play, isn't it? But it's interesting to see that going like as it is with the equity market rise that we had in May as well, both going in tandem. Everything heading up.
Yeah, and it's interesting that we can. It's not just a defensive play, but also the whole kind of U.S. debt issue hasn't really gone away. It may have paused for a bit, but the concerns surrounding that also giving support to spot gold. Let's bring us back in vision whilst I bring up my next overnight news. This one piqued my interest. Speaking of inflation. Louis de Guindos downplaying concerns over this return to ultra-low inflation era of the 2010s and saying euro strength not a concern. Is this something that piqued your interest? Did you catch this overnight?
So I've seen the imbalance that we've seen quite evident through euro-dollar. Euro-dollar now sitting at 115. They've had continual rate reductions, and yet it continues to become this kind of basket where people seem to think, as a sort of safe investment like gold. Really, it's been fairly well bid, and it's interesting because obviously this week we've got the Fed on Wednesday, which is going to give the pathway to whether or not they're going to do maybe 1 or 2 rate reductions in the US, which obviously will have a knock-on effect on the gold as well. But yeah, it's an interesting one on the macro front this week because you've got retail sales US today, we've got UK CPI tomorrow morning, and then obviously the Jerome Powell Fed chatter tomorrow, on Wednesday rather. Yeah,
Powell's gonna. Fed and Bank of Japan, the two key ones to watch this week. But I think JP is still gonna. He's still going to not want to get into a tit for tat with Trump. And he's going to feel very vindicated, right? Because he's all along said he was going to be data dependent. And so far, he's been on the right side of the fence.
Yeah, despite a lot of pressure from Mr. Trump.
Mr. Donald.
Yeah, to get that lower because of the debt problem, I guess. If they reduce that rate, then obviously that helps in a massive way of paying down the debt. So yeah, we shall see. I guess the other overnight intel was the Nippon Steel US Steel deal, 14.9 billion. That's now gone ahead, but with something different to normal deals, which is something called a golden share. I don't know if you're aware of this. So basically, the deal with US Steel has gone ahead, but it basically gives the US government what they call a golden share, which is strange when you look at private markets and buyouts and that sort of thing to have government involvement, and they've effectively now got some rights with regards to decision making within the state. So I don't know how this has been negotiated or what, but yeah, you see here it's got some good intel there about how it will work.
What's also interesting is that, you know, the sheer size, 14.9 billion. You know, it's been talked about for quite some time, and actually the whole thing about this deal is about whether or not they have overpaid, right?
Yeah.
This deal, for those of you that are just coming on the show, means that Nippon Steel will buy 100%, that's right, 100% of US Steel's shares, and the approval caps 18 months. So this is a long drawn out story. 18 months by the two companies amid a lot of resistance by unions and security reviews as well to get it across the line. Nippon Steel is the world's 4th biggest steel maker, and getting a grip on the US market has always been key to its global growth strategy.
Yeah, it's an interesting one, because I was looking at the steel market the other day, because I was looking into a stock called Cleveland Cliffs in the States for one of my clients, and that was kind of trading towards its lows, but it was originally being fairly well propped up because of the tariffs, because it was effectively the tariffs were making the idea of buying homegrown US steel, which is what this company does, more appealing. But now they're talking about the tariffs not holding, and special deals for the likes of Mexico. That started to come off. So a deal like this with US steel, with foreign investment, it kind of flies in the face of let's just do everything internally.
Yeah.
So be interesting to see how those stocks react to that today. But that's a big merger there, or takeover, I guess.
Trump also putting all this pressure on the Fed to ease policy. There's a lot of talk now that this might be backfiring because, you know, if we get a rate cut with futures markets, they're not really pricing in another one until September. This all could, according to lots of market watchers, prompt more discussions, more comments that maybe this was somehow or another stoked by the White House. So, I mean, what's your call? Do you think we're going to, you know, see Powell just, you know, stand his ground, or do you think we could really see a rate kind of cut as soon as this week? What's your gut feel?
I think he'll probably stand his ground, like you say, data-driven and all the rest of it, but there might be more of a leaning towards softening sooner. And yeah, if he says for sure that those two are coming in this year, then I think the market will probably react quite well to that. But yeah, now I saw something this morning when I was just reading through a few different bits and pieces, basically saying that the market isn't appropriately pricing in the impact of what's going on in Iran. And that at the moment it's trading, well, from what that was saying, synthetically high. But actually, if you know, one thing escalates a little bit further, you know, let's say there's a missile into the Strait of Hormuz, you know, where 20% of the oil, where the 20% of the world's
oil has to go through. You would have thought they'd find a way of making that less, you know, of making it less vulnerable, or trying to find different routes, right? I mean, 20% is a lot in this day and age.
Yeah, but it's the route because of, you know, the cost of moving this stuff is so high, and therefore this is the most efficient way, and you can't change where the water is, unfortunately. But yeah, I mean, we saw it before, didn't we? When there was
Suez
tensions
Canal
before, and all of a sudden they started routing all of the shipping traffic round the bottom of Africa and round, and the cost of that obviously then has a knock-on effect to the cost of the products, which then has a knock-on effect to inflation. So there's a huge amount, you know, a big butterfly effect from all this sort of stuff. So I think, yeah, the pressure for de-escalation is probably much, much larger than what we see in the papers, because the alternative is, you know, it's a disaster for everybody. So you've got to stay positive that there's something will come out to reduce the tensions, I suppose.
Remember that ship that got stuck on the... I still have it seared in my mind. These diggers trying No, I can't remember.
It was in our Christmas quiz. Do you remember?
That was a long time ago.
It was a long time.
Asking me. He's asking me a quiz when he doesn't know the answer.
I wasn't the question master.
Let us know if you know what the vessel was called, the one that got stuck Suez Canal with the little diggers. I remember little diggers in the front trying to get this poor ship unstuck. Meanwhile, there were reports of all manner of things rotting on freight ships on the outside, just going round and round, burning fuel. I think that BBC interviewed someone who was a sheep farmer or something, and they said all the
it was a disaster.
gone.
I've got a picture of it here. I do have the name now. Has anyone got it on the chat?
Anyone got it? Anyone got it? Boise, you're normally very good. Andrew McKelvey, good morning. Ashton, results look dull, but they are excited about activity that will come from US mega projects. We will take a look at that later. Just banging this up for you because what we were talking about, Audie and I, about the fact that all this hasn't really been factored in yet. And I want to show you a chart on rates and inflation. That little green line there is CPI.
Yeah.
That light blue line there is core CPI. And that red line there is PCE. And the yellow line is core PCE. And there you have it. The black line is Fed funds. And that dotted line there in orange is the Fed PCE inflation target. So after raising rates by 5.25 percentage points and holding them there for 14 months, the Fed in September cut rates by 0.5 percentage point to account for the drop in inflation, and by another 0.25 percentage point in November and December. It then left them unchanged at meetings in January, March and May. Officials now worry tariffs may reverse the progress on easing price pressures. I just think, even with tariffs, never mind what's happening in the Middle East, we haven't really seen that completely come through on price pressures yet.
No.
You think?
No, and they're saying that,
this could be a shock, a huge
really
shock in the making.
The impact as yet. So, be interesting to see. So, we touched there. Yeah, there we go. Well done, Abby. Ever Given was the answer.
Abby, well done. Ever Given.
Yeah.
Yeah.
I just found a picture of it. Yeah, really blocked that thing up.
It's not very memorable, that name. It's not like Boaty McBoatface.
No, true.
Speaking of which, Boaty McBoatface, 7:48 now. Let's have a look at what potentially could be some interesting trade ideas coming up. Let's have a look. Now, if you come off my screen, and I'm going to bring up my platform for you. I spoke with Dylan earlier on, and he said something like, "Go long oil, call your mum."
Right.
I thought it was very effective.
Yeah.
Yeah. Go long oil, call your mum.
What do you mean? Just go along and forget about it?
No, as in like, if things get increasingly worse in the Middle East, just call your mum.
Oh, okay,
Hey,
I've
mum,
got you. Yeah.
love you. I'm still here. Let's try and see each other before it all gets really bad. Yeah, that wasn't what you meant. But yes.
Christ.
Yeah. Long energy stocks, right? We've seen a tick up in oil prices, and what we then can see already is an impact on especially long haul airlines, those sort of outfits. So your United, those that are exposed to long haul travel. Wardy doesn't have to worry. He's already done all his holidays.
Yeah.
You just come back from a holiday, haven't you?
In May half term, yeah.
Look at that tan on this man.
It's gone down.
What, even with our hot weather?
Yeah.
Right now.
Well, I'm always trapped in the office.
Right, me too. The glow of Milan is gone. So showing you like, United Airlines, and also, the big ones that are exposed long haul. They have had a bit of a bounce, as we said, but, we have seen that immediate reaction there. Also, in Europe, it's IAG, International Consolidated Airlines. Why they had such a long name, I have no idea. Really dislike that name. But taking a look at that, you can see the reaction there. We are now starting to see some consolidation, right? This is the minute chart, but let's have a look at the daily for you. Yeah, so yeah, it has pulled back now. But in terms of energy, oil and gas producers, looking at the heightened political risk over in the Middle East, Wardy already touched on potential supply disruptions, the Chevrons, the Exxon Mobils. If you think this is going to continue,
well, I think that's why we got that big price jump, 8-9% last week when it all originally kicked off, and that was a reaction to the fear of supply constraints and big fields being blown and that sort of thing. And actually, what's happened since then, when oil's come back from sort of 77 down to 70, is I think a realization that supply is still unaffected. Targets that were hit were more in areas which were supplying Iran directly as opposed to producing to be exported and sold. So it was more targeted to, I think, create issues for the actual country as opposed to the global issues. And I think once people have realized that, that's why we've seen oil price come back. Not quite to where it was, still a good $5-6 higher. But the realization is that it's not this oil, gas, other fields and such that have been hit have not been done in a way which has been to sort of really throttle global expansion. So that's interesting.
So for the moment there's no contagion, or rather wider contagion. But keep an eye on that. If there is, widespread disruption, contagion, if the situation, starts getting worse by the day, by the week, then, these oil companies and energy infrastructure firms could benefit. Conversely, if we don't see an escalation and we see it contain, right, then this could be an opportunity for you to short if these stocks have gone higher. Also, of course, we talked about gold and precious metals type miners being selective, might I add. Gold prices have surged in the flight to safety, right?
No, exactly right.
So mining companies, there's a bit of a lag here, of course. Those that mine gold and all that, they could start to see a slightly delayed lift there. Keep in mind, though, it's tied to the contagion and whether or not we see a worsening of the situation. And
should we have a look at some UK names before the open?
Ashted,
So Ashted indication here being called down by the market makers, Singers, called down 1%. The financial year results, pre-tax profit 2.13 billion, and the estimate was 2.09 billion. They're on track to move their primary listing to the US Q1 of 2026. So I think they had a slight miss on one of their areas. So revenue and adjusted pre-tax profit. So pre-tax profit was 430, and I think on track. So small indication that they're going to be off by 1%. In terms of other UK 100 names, you've got Barclays. They've been maintained as overweight with JP Morgan. Their price target has been shifted from £4 up to £4.20. Then you've also had Bunzl, which has been cut to sector perform with Royal Bank of Canada. Price target 23.50 from 26.00. So that's a fairly significant cut there for Bunzl. So we'll see what happens to those on the open. Sorry, Andrew, what were you going to say?
ASOS, changing of the guard there, people. ASOS naming Aaron Izzard as CFO there.
That's right, I mean, ASOS has been an interesting one of late. I've seen a little bit of action in it.
You've got lots of clients at
it used to be, one of the main stocks traded actively by clients. ASOS, Boohoo, JD, B&M, all these sort of retailers. And they've been a little bit unloved of late, but it'd be interesting to see if ASOS sort of turns a corner here, because it's keeps trying and holding their sort of three, and and tries to get to 320, 325. But it's a difficult stock to trade. I've been trying to buy clips for a couple of clients. As soon as you buy any volume, it moves. It's only trading about 150,000 shares a day.
Yeah.
Which is like 400 grams worth of stock over a whole day.
Yeah.
So it's not what it once was, but there is still some appetite out there.
Well, the key for your clients is to come away every time it hits the bag holder level, which I'm going to draw for you, which is around there. So each time it tries to get up, it fails. Can you see?
Yeah, so you could, in theory, do nothing, set an alert around 335, 340 and go, right, okay, now it's broken through here.
Yeah.
That then becomes an entry with a stop pretty close there, right? And you go from there and hope it comes back to 5 or 6 quid.
Exactly. Or you could do an alert at 327 and go, time to...
Potentially try and go with it, yeah.
Go short.
Trading the trend.
Trading the trend. Do not fight the trend, people. Right. Speaking of trend and charts, whack the like and subscribe button for more of this useful information. We're getting you all across the upgrades and downgrades here. And one last one before we talked about BMM as well. CEO buying shares is what I'm seeing here. But we've got to go to guess the chart.
Oh yeah, nice. Guess the chart. I like this one.
Theo van Barthold. Have I got that name right? Got the last one right.
What was the last one?
The last
BP?
one was BAE, I think.
Okay.
Yeah. So, producer Phil, tell me it's a US stock, and first person that gets the answer, gets it right before producer Phil. Otherwise, producer Phil, if everyone gets it wrong, producer Phil wins.
I see.
Right. Let's do it. To opening bell, lots of guesses for that. Guess the stock. And Andrew McKilvey coming up with Tesla. Him and hers. Well done.
Yeah, that's a great shout.
Yeah, that's a really great shout. We were looking at the climb and then it coming off again, and we're talking. Yeah. Well, we've got the bell, Wardy.
Right, we're done. Opening calls. Here we go.
Poll trial wins. Go, go, go.
Hang on. We're still early. We've got 5 seconds to go.
We've got 5 seconds ahead of the bell. We like getting in early here.
Here we go. Right, let's go.
Hey, here we go. Right, we've got a risk-off day firmly in play here. FTSE 100 down 0.2%, and also Germany 40 there tracking lower by 1%.
Yeah, so everything's coming down a little bit more. FTSE's actually holding where we were before, but yeah, the US and Germany both going a little bit further. On the open, what's happened to oil? Let's see. So $70 on US crude, 72.20 on the Brent. So also kind of holding where we were just before.
Gold kind of stabilizing at that 3,384 level, and also checking my watch list there for you because that would have shaken out now. Right, here's the FTSE, and let's have a look at the top of the losers list first. Here we go. Fresnillo down 3% there, and Bundle as well down 1.5%.
Yeah, so Bundle down on that price reduction and cut. Legal and General also down 1.68, although up still strongly from where it came down to in April, 210, now trading at 252. So yeah, miners are off. Glencore's off about 1%. IAG 323.50 down 1%. And then if we flip to the top of the board,
just before we flip, Barclays not looking like that. JP Morgan maintain overweight, doing much for it. It's down 0.5% there. Let's cross over to the winners list. Now, not very many there, but here we go.
There isn't. Shell, a little bit. BP, a little bit.
Yeah, just support it there.
And Next, a little bit. But mainly a sea of red.
Moving over to Germany, if we may, let's quickly check on the German Sartorius, down 1.3% there. MTU Aero Engines also down 1.3%. And we got Bayer, RWE, and a lot of the defensive names actually lower. The reinsurers are also lower, Hanover Re there, and we've got some of the defense stocks that have ridden higher in previous sessions, like Rheinmetall, coming off now, down 1%. Adidas, if Rich is awake there, is down almost 1%. Let's cross over.
Flipping back to the UK, we mentioned it before, ASOS with their new appointment of their CFO. They are still super wide at the moment at 308.50 at 316, but they are looking in the blue at the moment on the back of that news, slightly up. And then you've got AO World also up 3%, almost back at £1 now, 95.90 at 98.90.
Have you ever bought anything from AO World?
Yeah, I did this week.
Have you?
Yeah, I did this week.
I don't know anyone that's bought
my
anything.
fridge packed in, and then I got a new one, but then I ordered the wrong ratio. I needed a 70-30, not a 60-40, so I had to go back. And then I tried to get a new one, and then it all failed because their systems were down, and then I ended up getting one that they wouldn't install, so now I have to install the fridge at the weekend, which I've done.
Nice.
Yeah.
Wow.
It's much better to get it installed. I would recommend that.
I'm very impressed.
Yeah.
You need like a carpet to slide the fridge in, and it's a two-person job really to push the thing
my father-in-law
back in.
was staying, so he got the job with
nice.
me. But yeah, one stock to look at this morning. I know Rich has looked at it a few times, which was the SWC Smart Web, the Bitcoin Treasury firm. So they're up a further 20% this morning at 350 at 360. And then there's a little read across, slightly different, but another stock which did one of these wrap retail offerings is one called Binance, ticker BTC. And they are a company which is specializing in the treasury, but also 50% of the money raised goes towards Bitcoin miners. And they did a raise the other night to try and, I think, do $1 million, and they're coming doing $3.5 million. So it just shows the appetite out there.
It does show that there is appetite.
Firms. There's the Bitcoin group in France, there's Metaplanet in Japan, there's SWC here, there's now this Binance, there's one in Sweden called H100. They're all basically doing this this sort of accretive structure of issuing equity, taking the money raised to then go and purchase Bitcoin and effectively give those investors in those firms the ability to hold something in a ISA or a SIP. But yeah, interesting area to look at the moment. But they are all, tiddlers really in terms of market caps and whatnot. Although that said, SWC continues to just grow and grow.
I've been wondering about this because I watched SWC, the Smarter Web interview, met the guy when he came in.
Oh, yeah.
But how much of this is to do with the lack of faith, or the growing lack of faith in, normal assets?
I don't know. I don't know if it's a flight from normal assets to this, or there's an ability here to be able to get involved in something in one of your investment portals. Whereas if you wanted to just go and buy, something in the digital asset world, you'd have to then pay.
Yeah, like Bitcoin or
correct. Yeah.
Ethereum.
So I don't know. And then I guess as things grow, momentum builds. And then you get the whole FOMO trade, and then you get, other people looking at it that didn't know it was there before. And then you get sort of the wealth management and institutional world going, okay, yeah, maybe we should have some asset allocation to this sort of stuff. So it's obviously, that plus a US listing, and just seem to move it from strength to strength. But yeah, let's have a look at some of the more main market
whilst
things.
you're whacking that up, Kareem, I just want to take your attention to this because you heard us talk about that big gain that we saw in the previous session, and we did say that it is a blip in the grand scheme of things, and you can see there where my cursor is, it is now down, giving back some of those big gains we saw yesterday, down 2.4% as we speak. Another one that is a key mover, Morgan
Stanley.
Yes.
Yeah, I see that.
There we go, up 9.5% there, big gap up, adding that to my workspace. Morgan Sindall seeing full year results significantly ahead, right? And strong trading at Fitout. You heard us call out in the upgrades and downgrades and, big moves ahead. Morgan Sindall, one of them that we were watching this morning.
Yeah, so let's have a quick look at FX as well now. Let's see what's happened to the pound dollar. Broadly flat, 135.60. Dollar yen, 144.87. Euro dollar pushing that level, trying to get back up to that 116 handle, 115.60 at 61. But yeah, US retail sales today at 130 is the key, I think, for the main sort of macro markets to keep an eye on ahead of obviously the big event tomorrow with Jerome Powell. So at the moment, everything is a little bit risk off, and we are, seeing a little bit of red across the board. But you've got to kind of take a little step back from the 5-minute, 10-minute chart and go, you know what? If we bring up the US tech, and I bring up a daily, and I go back to, I don't know, the 7th of May, which is, not long ago, really, 6 weeks?
Yeah.
We were trading down at 197 in the NASDAQ, and now we're trading 218. So
it's an incredible,
it's, a phenomenal move.
It is a phenomenal
And the fact that you've got, the brink of some kind of bigger Middle Eastern crisis or conflict, we've got a 12% move up in 6 weeks.
It's incredible.
12% in an index in 6 weeks, and it's barely shrugged, basically.
Yeah.
So you look at the thing, it's down 100 points. Well, who cares?
To add to,
The thing's up 2,000.
I know, it's insane. And to add to this point as well, let me just show you the option side of things, because the option side of things tells you, the story behind, because Wardy's chosen the Tech 100, but it's across the board. If you take a look at the daily here, we're seeing volatility, unbelievably, given what we saw in April, is unbelievably low, right? It's just suggesting that markets are just shrugging this off. Take a look at the US 500.
You've got what we've got going on in the Middle East. You've got the Fed announcements tomorrow. You've got CPI UK tomorrow.
Tariffs.
You've got US retail. You've got tariffs.
Yeah.
You've got the whole sell in May and all the rest of it and go away for the summer. You've got all these different things which would usually lead you to think, okay, maybe there'll be some movements soon. And you've got, implied vol of 20 on a daily US tech with what's going on.
Yeah.
Seems odd, but the market is a cruel and untamed beast.
Yes, the market
It does what it wants.
Does what it wants, despite your best efforts.
Yeah.
Right. So, Producer Phil, we've got fast markets. We've got Dylan coming up next. And I've been told that Wardy has got a client meeting.
We've got a client meeting.
Do you have a client meeting? Because I'd love for you to stay, but you know, a client meeting.
I have a client meeting.
He has a client meeting, a very important client, so you need to get to your client meeting. But don't go away, trader friends, because we got Dylan Ratigan coming up next to tell us why we should call your mum and go long oil.
Nice.
Thank you, Pete. Thank you so much. And happy birthday again.
Yeah, thank you very much.
Loads of chatter coming through. We'll get through that with Dylan when we are back. Stay right where you are. Get your coffee, get your tea, but keep subscribing and slam that like button.
Bring me the next shiny new thing. Bring me the next shiny new thing.
So today we're on set filming our latest ad campaign for IG Invest. IG Invest is the latest innovation from IG. It's aimed at those who are interested in investing or maybe have a bit of knowledge but want to become more experienced. And what we've done is created a really beautiful, easy to use app, and now we've got to publicise it, and that's what we're doing today and trying to capture. So we worked on this ad campaign with Otherway, who are our creative agency. And what we really wanted to do is think about breaking down the barriers to investing. And so we wanted to think of an idea that was playful, fun, but also inspired empowerment.
So essentially, look, a lot of financial advertising can be quite dry, a little bit kind of wallpapery. And I think the idea was just to create something that was really eye-catching and kind of use that distinctive IG red, but put it in this really interesting metaphorical space where investors felt really kind of calm and kind of very effortless in what they're doing.
So my work is colorful, it's poppy, it's quite surreal, and I think this is one of the projects that is a perfect match. It's really nice to have a company that's very brave in their approach, and I think as a creative, as a potential target audience of the whole thing, I think it's going to work very well.
There were too many people to name who've worked on this project. You know, at IG, it's really important that we move at pace whilst delivering really high quality work. So we've had to have the best brains in the business on this one, and we really hope that you like the result.
It's been a real pleasure working with IG. I think ultimately as a brand, they're really keen to push things and kind of take the financial kind of advertising space somewhere slightly more interesting. So it's been a real joy for us to work with them and help them kind of get there on their journey.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
This is a huge moment for IG and a major milestone in the UK's crypto journey, with retail investors now able to buy, sell and hold 35 crypto assets with a grown-up business. Adoption is rapidly growing, and with UK crypto regulation gathering steam, we want to give existing and future investors a platform where they can trade crypto with clear and transparent fees with a provider already used by hundreds of thousands of retail investors. With the addition of crypto, our customers will enjoy a more streamlined investing experience, with IG now providing a one-stop shop for a wide range of assets. We're really excited to bring this crypto offer to the market.
Hey, trader friends, we are back with Dylan Ratigan joining us all the way from Milan. Good morning, Dylan.
Good morning. Happy summer. Nice to see you. You're looking very summery in your sort of, Lady of London, anchor lady outfit there. It's nice to see you.
Well, you would have seen it for real if we had managed to, meet in Milan, but, London transport got you. I know that. I know that feeling.
You can never trust the trains in this continent.
Speaking of trust, we've been speaking a lot about your trade idea. In fact, I've talked about it twice already before you coming on. And what's interesting is I said, oh yeah, Dylan said long oil and call your mom. And then
no, I said short oil.
Short
oil? If you get long oil, you really got to call your mom.
Sure, buy the bond, buy the bond, sell oil, call your mom. And then Pete Ward, who was here with me, then said, is that a trading strategy? What does he mean by call your mom? Is that an acronym? I love it.
It could be. Listen, that's when your position's just a little too big. If you're a little too short oil and you're a little too long the bond and it's not working. So I just figured it's good to call your mom ahead of time.
Yeah.
Just in case it gets out of hand.
Just in case it all goes Pete Tong. Let's have a look at oil then to begin with. So sell oil, you're saying. So talk us through this.
Yeah. I mean, this is always a short World War III trade. This was the most successful. I'm going to jinx everything now, as you know, but this was the most successful trading, sort of repeatable trading strategy that I was able to deploy last year. It really hasn't come back this year until the last 5 or 6 days. But when oil goes into a spike like this, I mean, you could already see that it's sort of topped and is settling back. And it goes into a spike for obvious reasons. So, we have all seen the news headlines over the last 6 days or whatever it is, that it has been very consistently an opportunity to sell those call spreads. You get a huge spike in volatility. You give yourself a little room, maybe take half a position the first time out, a quarter, even a third of a position the first time out, sell some call spreads, wait it out. And, so far, World War III hasn't started. And every time World War III doesn't start, oil returns to a more normalized trading structure.
Right.
And even this one, I think, is one of the scariest in terms of the level of military activity, some of the highest that we've ever seen between Tel Aviv and Tehran. And, this is deeply alarming on many levels. But I would also say that the reliability of the short World War III trade is also an endorsement to the idea that as alarming as the military violence is, it's also a belief that the military violence will not spiral uncontrollably, which is by definition sort of the necessary outcome in order for this trade to work. But it is what I just said, plus an ability to take advantage of that huge volatility spike that you get in oil, not just a price spike, but the vol spike. And so for me, it's not so much about directionally being short or even obviously not buying puts, but it's a great opportunity to sell call spreads. And that's what I like to do in this situation.
Nice. I'm going to pull up the options ladder as well for our trader friends here to have a look at what we are talking about.
Can I just ask a question?
Yeah, go on.
Are all of the traders your friends? Like, do you have any traders that are not your friends that are still traders?
They're all my friends, and actually, many of them came for the Tasty event last year, and it was interesting because when I walked into the space, Tom was there as well, and Rich was there too. I had several people come up to me, and they are loyal fans who watch the show. And they said, Ange, we knew you were here before we even saw you. It was just your laughter. And so I got to know a lot of these trader friends and their real names. And it's wonderful. It's wonderful to actually, press the palm and see them in person. And they've helped me in so many ways too. I mean, aside from trading, outside of that too, there's a real fantastic community here. You'll soon meet them. I've sent some of them to Milan to track you down.
Okay. Listen, you know where I am. I'm not hard to find.
You're just hard to pin down because you're on a plane all the time.
That's the problem. Anyway, back to our volatility
Back to
trading here.
the volatility play here. Now, here's a look at oil, but also I want to pick your brains because on the indices, Pete Ward and I were talking about this earlier. It seems like the markets are just really, across the board, ignoring largely what's happening in the Middle East. And you see that on the, I'm going to pull up the US Tech 100 and the daily contract there. Implied volatility is still super low relative to what's happening over there. Is this also another option to kind of like it's because of the low implied volatility, it doesn't cost so much to buy a put, for example?
I mean, I don't look at, I understand that. I would say no, but I would say that the behavior of the U.S. equity markets and its relative, I would even say its absolute indifference to the geopolitical headlines and the conflict is a validation of why it's such a good idea to short oil. So instead of trying to meddle around with the equity market, which can go either which way, I mean, I think ultimately it's sort of set up to gently drift higher just because that's what it does. And obviously you talk about your avocado. I mean, if anything, if you had a dip on the equity side, it's something to think about, but you don't. And I would say the absence of any reaction on the equity side, to repeat myself, is further confirmation of the value of that selling that call spread in oil, rather than let me put it this way: anything that I'm going to consider or that I would recommend anybody consider relative to the equity market should have nothing to do with what's going on in the Middle East. I mean, that's a function of your perception of growth, valuation. I mean, it's just the standard lift, which you can get to, and I think and for me, if you're looking at growth and valuation and sort of the more standard things, I'm more interested in getting long the bond than fiddling around with the equity market in terms of the macro factors. But I don't want to skip ahead. The oil trade is for sure the tastiest fruit on the tree.
The tastiest fruit on the tree. The lowest hanging or just the tastiest?
I don't know. It's something I can make it. I don't know. There's maybe lower hanging, but not so tasty. This one's sort of mid-tree, but damn tasty.
Just damn tasty. I love that. The other one that's tasty, gold. Do you like gold? I know you like silver.
Gold. I don't know about gold. It's not. Gold. I've never had any. My personal history with gold is. It's like a person you never really got along with, So
I have a few of those.
Nice to me. Yeah. Don't we all?
Right. So this is a 5-minute chart of gold, just whacking that up for you to have a look, because we are still making that slow swing up, if you like, to that 3,500 mark, with a bit of retracement every single time we try and get up further to that key level. It's interesting there because spot gold, you could play it both ways. You could go long and say, yes, everything going on, it will hit 3,500, or you could take a look at the pullbacks and play it that way if you are a day trader. Lots of people out there asking whether I buy gold on short-term pullbacks. Yes, I am bullish on gold generally, but that is my own humble opinion. You have your own stance, I'm sure. Let's go to bonds now. You've been talking with the Tasty guys a lot there, Dylan. What's your take on how to play this on the bond front?
So, for me, this is a combination of a sort of global macroeconomic point of view, which is, I think the economy is relatively healthy. I think that the Trump tariff madness was relatively limited in its ultimate disruption. Although I think it was, brutal to the credibility of the American president, I don't think it was brutal to the marketplace in a way that I think we all feared it could be. So I think, one, the economy is in decent shape. Two, I think that because there's a Fed meeting this week, I think that we're going to move more and more to a Fed world where we're no longer biased to cut or raise. We're just in this. We're going to be in more of a holding pattern kind of a situation. And I just think that that sets the table for a little bit of a creep higher in the bond and a little bit of a drift lower in the yield in a way that provides some opportunity relative to getting long equities, for instance. So it's a combination of a point of view on Fed activity. I mean, in some ways, the worst thing for when I was talking to Chris and Ilya yesterday afternoon on overtime, the biggest risk to my little bond hypothesis would be not for the Fed to do anything this week, which obviously they're not going to do anything, but for them to actually marginally increase their growth expectations and further reduce the perceived probability of rate cuts. But I think that on the margin, that's less likely than just no change, wait and see, data dependent.
Yeah.
Where, you know, this sort of the most sort of milquetoast version of Fed speak, which is stand by and let's see what comes in.
Yeah.
But I think ultimately what is going to come in is going to be marginally better earnings, marginally stronger labor markets, marginally better economic data. But in a Goldilocksian sort of way that allows a little upward drift in the bond, which is not great for my preference for a strong dollar, but that's a different conversation.
Yeah. I think you're right there. I think there's going to be this slow drift higher, this Goldilocks, which they'll fudge it, right? They'll fudge it somehow, and then we'll see a further consolidation of futures markets pricing in perhaps a cut sometime September. That's what the current futures market is showing at the moment. But how about the?
But don't you think they just keep kicking the can?
Yeah. I think maybe they just keep kicking the can and and keep using that double D word, data dependent. Unless things get really bad in the Middle East and this starts pushing up all manner of things, import prices, right? And it becomes not a cool war but what we call a hot war, and that then pushes us into the situation where energy prices are rising globally at a time when we got the tariff impact.
Yeah, well then you're going to get a recession. Then it's going to be a huge mess, right?
Then really call your mom.
That's what the market is saying. Then you really need to be calling your mom. Because if they shut down the Straits of Hormuz, which is always sort of the never-ending super fantasy sort of catastrophe that I don't think is going to happen, or if there's some more substantial weapons that are deployed mutually between these nations. But again, the whole premise here is that that's not going to happen.
Yeah. I mean,
my whole premise is.
I think so too. I think you're right. We've been here many times before. We get this huge, spike up reaction, but actually we then find out that the hostilities are contained, and then everywhere else sort of starts normalizing and stabilizing, and it's business as usual. And certainly, if that happens, then we could see a completely different picture. Your bond theory play out. At the moment, inflation expectations is pushing the chart up because this might be of interest to you. The New York Fed inflation expectations easing off in May. We're going to see this trend here, interestingly, perhaps start to blip higher if we start getting the tariff impact coming through. But consumer inflation expectations as well. And we got some figures out. I think retail sales we're waiting out on later today. I don't know about you, but I'm expecting a slightly hotter than expected number. Have you spoken to your family in the US? Are they saying that inflation is easing off, or is it still very high?
I mean, anecdotally, I haven't really heard one way or the other. I mean, the thing with inflation, where I think it is most apparent and most felt, is in the grocery store, because it's just the most direct, consistent, and literal. And the thing is, even with inflation coming back to sort of normal rates, everybody knows this, but they also kind of forget it. It doesn't mean prices have come back down. A block of cheese is still $10. It just hasn't gone to $11 or whatever. So I don't have any guidance one way or the other in terms of the anecdote, but I do look at that data that you just had on the screen, which is part of the reason for my long bond hypothesis.
Yeah, I think that's a great hypothesis, given that, I don't think there's any conviction just yet amongst households or markets that inflation will be back to its target anytime soon. I think the Fed's aware of that, right?
For sure, sure. And I think I think there's of all the data, the one piece of data that gives the Fed the most wiggle room to kick the can is that.
Yeah.
Right. That chart looks different. It's a dip where the whole everything different. I think that's more important than the labor market right now.
Yeah. And I'm pleased you brought up the labor market, because I was going to get to that point. Because I think if there was one piece of data that the Fed is going to think, wait a minute, we might need to change tack here, is the jobs data. And, we're already seeing cracks there. In the Philadelphia Fed, President Patrick Harker saying absolutely critical that decisions on monetary policy have to be free of external noises and influences, but then nodding towards jobs market as well. I'm being told, oh my goodness, we got breaking news. I thought we'd have breaking news, back at Bloomberg and places like that, but we got breaking news live on air with Dylan. We have just hit 1,000 subscribers on Trade Live with IG.
Amazing.
What?
Congratulations. Welcome, trader friends.
Welcome trader friends. And we've already got comments on the chat saying, can we charter a Trade Live with IG plane to go to Milan, please? Thank you, away from the numbers. I'd love that too.
If that oil trade works out, we'll use the oil money.
And the bond trade. I fell in love with Milan, actually. Karen McKinsey, thank you very much. David Boise, Boston Frank, Monkey Man, System Pro Fox, and Jugger Jugger. You guys know who you are. And Rue as well, our Sachs. Thank you so much for being such loyal viewers. We love speaking to you every morning. So yes, they are asking for a charter flight over to Milan. Get that sorted. I'll be happy to pilot the plane for you.
I'm on it. No problem, trader friends. We'll Air Ratigan. I'll send the plane.
Yeah. And there's still, I'm sure tickets have sold out, but Dylan will sort you out with a ticket, even if they're sold out.
You listen, any trader friend of yours is a trader friend of mine.
Right. Quickly getting back to the markets, just coming off that right now and going back to my screen. But we are just taking a look at the bond situation here. We are here looking at the 10-year, 20-year, still the 20-year just below 5. I mean, call it 5, right? It's just below 5 there in terms of what we are keeping an eye on for you. Dylan, how's the rest of your day panning out? What have you got planned today before Tom and Bat arrive in Milan?
So I'm basically warning all the children about the arrival of trying to make sure everybody's in a secure location. I don't want anybody to get be trading before their time. And then we've got the big setup. I got to make dinner plans for Tom. Tom's very high maintenance. You got to do a lot of planning for him.
He's also very into his food. I've noticed that he likes.
I'm aware.
He likes ordering as well. He likes ordering.
I got big expectations. I got a lot of pressure on me right now. Actually, I haven't been sleeping at night. I got restaurants to pick. I got tomatoes. I got to identify the right cheeses. All these things. It's not an easy situation that I'm in.
I feel you. I feel you, friend. I've been there.
And not to mention Euphoria, the sneaker business. Euphoria Sneakers is premiering next week at Paris Fashion Week. So at the same time that I've got to do cheese and wine selections for Sosnoff, I'm dealing with Parisian party planning, which is no small feat, especially since the French sometimes are uncooperative. If you're not French, if you know what I'm saying. I say that with all due respect and love for the French, of course.
Do send us pictures. I'd love to see the launch. I wish I could come for the launch.
I'll be joining you live from Paris. I'll be joining you from Fashion Week next week in Paris. We will do this.
Amazing.
But it'll be from Paris.
Fantastic. Well, we'll see. Then we got Matt Arthur coming up next. Thank you so much, Dylan. And good luck with Milan next week.
Thank you. See you soon.
tastylive's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission-free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
This is a huge moment for IG and a major milestone in the UK's crypto journey, with retail investors now able to buy, sell, and hold 35 crypto assets with a grown-up business. Adoption is rapidly growing, and with UK crypto regulation gathering steam, we want to give existing and future investors a platform where they can trade crypto with clear and transparent fees, with a provider already used by hundreds of thousands of retail investors. With the addition of crypto, our customers will enjoy a more streamlined investing experience, with IG now providing a one-stop shop for a wide range of assets. We're really excited to bring this crypto offer to the market.
Hey, welcome to Live on the Trade Desk with myself, Matt Arbo.
Morning, Ange. How are you?
I'm very good indeed. How are you?
Yeah, good. Over 1,000 like and subscribe. There we go.
It is a watershed. When producer Phil yelled in my ear, breaking news, I thought you were going to say something like, Tehran has lobbed something, or, Israel's Iron Dome is malfunctioning, something. No, it was even more important than that. 1,000 subscribers.
And yet still the market's looking a bit skittish on those numbers. So I'm not sure what else has made them come off this morning. So
right.
Yesterday we were in wondering why equities looking so robust. This morning,
Let's have a look. It all changed. Let's have a look across the board there and zooming in for you. We've got the DAX heading further into the red. We've got the FTSE 100 doing the same as well. Certainly a risk-off feeling all round. But it's interesting. It's starting to soften a bit more now.
Yeah, I suppose it's counterintuitive. You look at oil, everyone had their eyes firmly focused on oil, looking for this sort of spike in the price of crude, and crude again softer as well.
Yeah,
so it's
Is it because of these hopes for a truce, do you think? Do you think it's...
Yeah, hopes for a truce. Maybe war was driving markets. I don't know. Can't say these things. But it is an interesting reaction from equities. Obviously, the US was very strong yesterday, or very strong and quite low volatility. We just saw that sort of gradual up move throughout the session. Again, sort of hard to ascertain quite what was driving that session extent, and then a bit of a pullback, I suppose, as people are reassessing. Nothing particularly hard came out of the G7 talks.
Nope, and to be honest, none was expected.
Yeah, well, yes.
Those places are where you seem to talk the talk more than...
Not a place where deals are done.
No, that's elsewhere where we shall not discuss. Yeah, but talking about this, taking a look at the options, we talked about this quite a bit don't we? Like, taking a look at just US 500 and, daily, or we can go on to weekly, still around the 20 handle.
Ticked up a little, but not a great deal.
When I came in this morning, it was about 18, 19.
Yeah, so it's ticked up a little on the morning, similar with the German DAX, but...
Let's go to the DAX now. Have a look at the DAX. Here we are.
So there, the DAX sort of pricing in a sort of 100, 150, 160 point straddle on the day, but that was not, decent net change, but vol not really explained. Certainly, having from some of the moves we've been through and some of the vols we've seen, there's not that sort of market pricing in high levels of risk yet as to any sort of dramatic events to happen.
Since we have the guru of vol here, I'm going to put some comments that we've had to you because of this seeming calm on the implied vol side. Does this mean that overall it is actually cheaper right now to think about selling a call spread, for example, or it doesn't cost as much to buy a put? It certainly doesn't cost. It doesn't cost as much to buy a put. There's still the bias onto the downside, that risk pricing. But yeah, that's of course the nature in the softening of vol. It's the price of insuring against your risk. You always look at what options are there for. Principally, it's an insurance policy. The seller of the option is selling the insurance. The buyer is buying the insurance against moves that could happen. So yeah, they're variable premiums. There you go, trader friends. You heard it here.
Distilling that. This is not complex stuff. But just distilling it. People often get thrown by the concept.
Yeah.
But just most people, they don't understand why their car insurance goes up. But there's the perception that it costs more to pull that risk, and that's what the options market is there doing for you.
There are lots more people of your age group that are driving more recklessly. Yeah.
Well, probably incurring more points given the amount of 20-mile-an-hour limits that are in place.
I don't have any points, but what I have been incurring is bloody fines every single time they change some to 20 miles per hour. This street between 4 and 4:30 will be some restricted zone. So I have been incurring lots of fines, paying towards the council.
It is a minefield. Driving in London.
It is. Speaking of minefield, we've got retail sales, right, this week. Got import prices. We've got weekly jobless claims. Aside from the hostilities in the Middle East, what do you think could change this implied volatility?
Well, we've also got some central bank meetings, don't we?
Yes, the Fed, the Bank of
Japan was disappointing last night. I don't know. I think the press conference has probably just finished, but very little price action. Yeah, usually starts at 6:30. Yeah. Carida often talks on till about 8 o'clock, so probably finished whilst I was waiting to go now. Not a lot of action there. And Dolly N, as we talked yesterday, the market wasn't expecting a great deal, and not a great deal seen, which I think actually is where the pricing is across of all these meetings for the week. And again, it is a holiday week in the US, so weekly jobless will come forward. Weekly jobless will be tomorrow rather than on Thursday. For those people who like to follow their jobless numbers, technically those should be the drivers for the week, but no one is getting particularly excited.
No, it feels like it's just overall wait and see. Is the feel that I'm looking at or feeling at the moment. We've got US Steel, of course, that story after Trump approved Nippon Steel, $14.9 billion bid for the company. And just taking a look at got Ashted earlier today. Andrew McKilvey asking us to keep an eye on it.
Chris Beecham favourite stock.
Is it his favourite?
I don't know. It's one he often talks about it. Ashted and its sort of UK exposure to the US. Up
1.5%.
Sexy generators.
Yeah.
So.
I think Andrew McKilvey was asking how come it's done so badly given it's got exposure to the US. Let's have a read out here. Ashted. Right. Sees slowing, there we are. Sees slowing rental revenue growth amid US construction woes. So
yes, it's the plant hire business. It's selling generators.
yeah.
You know, often everyone thinks about Ashted in the UK. They always get talked about as festival season, that all plant hire going out. You know, your mobile power rigs at Glastonbury, etc.
Yeah, when the generator goes out, you know who to blame. But yeah, the pre-tax profit, adjusted annual pre-tax profit, fell by 5%, slightly above the consensus, the company's own consensus. But it looks like, taking a look at the chart, if I may, it is not very happy. Investors not very happy with that result, down 1.6% there. Elsewhere, you know, we are looking at well, counting down to the all sessions at 9.
Yeah, it's some big movers this day in the US. Are sort of the sort of re-emergence or re-exuberance of the quantum computing stocks. Circle Internet, which IPO'd about 5 days ago, which had a stratospheric run up, which is you know, again, similarly leveraging blockchain. Lots of the sexy terms that are still exciting investors hugely.
Yeah,
you know,
it's all coming out.
AI, blockchains, and quantum computing back in. Huge enthusiasm from everyone, and some really strong moves there.
Yeah.
But it was a very strong market yesterday across the board.
What's interesting too is that you know, we're seeing a lot in Europe as well, talking about blockchain and crypto. These kind of small firms coming out and basically trying to sell the accretive side of things and using bonds to buy crypto.
Well, why would any company? Why would any company now buy back its own shares? Surely you buy Bitcoin. You know, rather than buying your own share, buy Bitcoin, and one Bitcoin's worth
limited
5x.
supply. What is it? You can only mine however many until, is it twin?
That's self-fulfilling. The limited supply of Bitcoin is what makes the price higher. And you not understand.
I do. That's why I'm saying it. I get
so
everyone
if other people are buying, it makes the price go higher, and it's a wonderful virtuous circle.
I love winding that up. Bitcoin.
Winding up and being quite serious.
Lots of people in the gallery also chiming in there. But tell you what I'm looking at ahead of the open for all sessions. Taking a look at United Parcel UPS. United Parcel Service. Have you ever used them? I have a feeling UPS is a climate catastrophe happening as we speak, because they give out, and as well as the US Postal Service, they give out free, no one checks, they give out free plastic resealable bags of many different sizes. And I know for a fact that there are many people out there, they've just gone in, grabbed 10, and that's their Christmas wrapping done. Put the name on top. I'm serious. I'm deadly serious here.
So they're not clear bags.
They're not clear bags. Okay. Yeah, they're just postal bags. But UPS, there's a reason I'm showing this, trader friends, because UPS, FedEx, the Trump organization has launched a self-branded mobile network dubbed Trump Mobile, and named these companies.
How are you going to link this to UPS?
UPS and FedEx have been named, wait for it, companies as shipping partners.
Oh, shipping. Lord, shipping partners to the Trump mobile phone, which is a glorious gold colour, I know.
Mobile. Yeah. Trump anything now. Trump burger, Trump, you know, cell phone.
It's kind of a an eccentric move into technology. The Trump phone. I don't know. It's a strange one.
We've got lots of chatter coming in hard and fast. You want to quickly read through some of them?
Well, we're still, you know, talking about these wonderful UK crypto investment stocks, I think.
Yeah, let us know on the chat if you have exposure to some of these investments that are sprouting out across the UK and also Europe, might I add. Mevin, Jordan, good morning to you. I don't think we've met before, but good morning. Putting on a July bull put spread on USO with an implied volatility at 50%. Seems like a good thesis. Thank you. And away from the numbers, Neil saying, Boise agreed, my long-term Bitcoin play is on MicroStrategy.
Yeah, it's one of these. The need to buy the equity. It's not like it's hard to get hold of cryptocurrencies these days. You can even buy them at IG. There we go. There's a plug. The wish to pay, and someone else, I'm sure, will come and explain to me why MicroStrategy can buy bitcoins much better than you can yourself, and I'll be intrigued to hear it. But the wish to buy the equity to avoid a small amount of capital gains when you're buying a much higher multiple of what the crypto itself is worth. Yes, everyone else is doing, and it's a sort of a great the fool's theory that you've been rewarded by holding these stocks. But at some point, as people realise the access to cryptos and the ability to hold cryptos and the worry about holding cryptos and the need for other people to hold them for you, or not wanting to do the hygiene purpose of holding the coins yourself, the rationale for buying the equity rather than the underlying seems increasingly flawed to me. But there we go. I've missed out. I'm obviously jealous. Well done for everyone who's bought in.
Andrew McKilvey, watching you as you speak. Yes, he's saying FOMO got the better of me. Andrew, you're going to the Tasty event on Friday. Bigger Beer is also saying, saw something about that yesterday. Preferred to the actual Bitcoin rather than MicroStrategy. Worry about the unraveling of MicroStrategy versus holding the coin.
Yeah, and of course we all know the part of what has underpinned, we've all heard this story multiple times, that's underpinned MicroStrategy compared to a UK listed vehicle is the options there on MicroStrategy are so heavily traded. The ability to long the underlying, short the volatility through the options, and sort of it's a volatility play as much against the convertible as anything else with the fundraising. That for UK listed stocks really isn't the game, given how undeveloped the UK equity options market is, particularly on an Aquis listed small stock. There's no further play against the convertibles, so to make it attractive for people to hold the convertibles. So we're only talking about issuing stock to buy coins rather than issuing convertibles to buy coins. So it's a bit of a different dynamic, but well done. It's worked. It's working for them. So
yeah. The what is it? Andrew McKelvey said the hold my nose and buy trade.
Well, yeah, and often those are the best ones, aren't they? It's
away from numbers saying, Ange and Matt, I couldn't get hold of Bitcoin as a retail investor easily, so MicroStrategy was the only route available.
Yeah, I think my narrative here is that's increasingly changed. That the ease of onboarding with people who will sell you crypto and the hygiene factors. You don't necessarily have to tokenize your money and go through multiple transactions to buy the coins.
Own physical.
Or have your own key, your own wallet.
My goodness, there's so many versions out there. I had no idea until I searched it. I mean, there are thousands of different keys that you could have. Cold wallets, hot wallets.
Completely, and this, I suppose, it was part of the attraction 5 years ago. Like, your classic person who was into crypto quite likes a bit of tech, and this idea to talk about how much better your wallet was or how much better your security was. It's part of the attraction. There was a lot to talk about in the space. Now it's quite clean. As I say. Lots of providers, but you can do it in a clean manner at IG, buy the physical coins and sit there 100% no lev. And there are multiple ways to do it without going to MicroStrategy or a similar vehicle, an IBIT or whatever. That's not necessarily the case. Yes, of course, if you hold the right listed vehicle, put it in the right tax efficient shelter, you can avoid the tax.
There we are. Lots of different ways, lots of different hygiene processes. Speaking of something a bit older, Legal in General. Just going to show that to you right now because it is down 1.3% there. Lots of people hold Legal in General there, especially here in IG as well. Among one of the biggest losers on the FTSE 100 this session. This move here coming after the company said that its core operating earnings per share will grow between 6 and 9%. But really, JP Morgan analyst said it's quite disappointing and that the fact that it's just only reiterated its 2028 targets and not bumped it up
Yeah.
you know, could be disappointing for some.
Okay, but yeah. Moving from highly volatile
Yes,
stocks to
to-
nice steady stocks.
Let's have a look at the divvy. There we go, nice chunky divvy there of 8.3%. You like Legal and General?
It's not one I hold. I'm looking at that dividend. I'm questioning if that's the real number there. That seems quite punchy on.
It is quite punchy, isn't it?
On Legal and General. Perhaps that's being revised. Perhaps that's using some old numbers.
Higher than BP.
Yes.
Right, on that note, we will check that for you. But thank you for getting us to 1,000 subscribers. And it's great having Matt here on this momentous day. I'll never forget it for the rest of my life. And Dylan as well, of course. Trader friends, do stay with us because we have more coming up. We've got Rich and Batista, the bat, right? And we will have all sessions prior to that. And we'll see what happens with UPS and FedEx to see whether there's a continued reaction. Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Hey, welcome back to All Sessions with myself and Matt Arber. We have 2 minutes to go. Any volatility tips on how All Sessions might open? I mean, it's been a down day.
Yeah, we're expecting everything a bit softer. You know, some of those names, they came off after the bell late on in the extended hours last night. Some of the big names, Tesla's, Palantir off its highs, Coinbase off its highs. So everything drifting a bit low. I think we expect to see that softer tone continuing this morning.
I've got my All Sessions board ready to go there, and I'm pushing the bell towards you. Ring the bell. You ring the bell. We've got still plenty of time in the world of broadcast. 2 minutes is an age. We've got about 2 minutes, right, Phil? 1 minute to go. Just reading some of the headlines coming through here, getting you across that Fresenius Medical Care, talking about share buyback. Apparently, a share buyback will commence in the second half of this year. Fresenius is a very good defensive, but it's down 1.5%. At the moment. Show up the chart, Cam.
I was going to say caught in the drug story, yeah.
Yeah. However, its share price, not doing too not too shoddy. You know, if you got in after that April moment, lots of people took that April tariff tantrum moment to load up.
Yeah, and actually that's how they've overperformed. I suggest others in the sector there across the timescale.
That's right. And also Siemens and NVIDIA, another one to look out for, expanding the partnership to establish AI applications faster in the industry.
Wow, am I ringing the bell, am I?
You are ringing the bell.
Good Lord.
He's not getting my hint here.
I'm not.
Why?
I'm sure I got the right peel out of that.
Did you get the right tone? Did you get the right
I didn't
tone?
get the right tone. Often a problem of mine.
Right, so let's see how it's shaking out, everyone. Here is the losers list. Matt. Oh, the zoom's gone a bit awry. Right, watch list. Here we go again. Okay. There we are.
Well, so we're just seeing some of those again. It's some of the
moving quite rapidly there.
Yeah, well, there's everything uncrossed. It's some of those sort of names, the IONCs, your quantums, your cryptos, just coming off. As I said, they had really strong rallies yesterday, and it's just a bit of profit taking there and a bit of a rollback. I'm trying to think if there's anything
blockchain down to MicroStrategy.
Interesting in there. Nothing particularly standing out there as a big mover.
Hims and hers down more than 1% there. Monkey Man, I hope you're still shorting hims and hers, because we talked about this many weeks ago. US consumer in particular sagging there. So that is.
It's probably not had a great time if you've been shorting hims and hers from a few weeks ago, but it's one of those that has had a very good bounce.
But let's have a look at the winners list as well. Here we are. There we go. Reddit up 2.3% there. We're seeing some of the oil names as well climbing higher. Oxy is up almost 1% there. ExxonMobil up 0.5%, trader friends. Those of you that have and hold Exxon Mobil amid the hostilities in the Middle East, you've probably got a smile on your face at the moment.
Well,
Chevron,
probably not the smile you thought you would have had on Monday.
Yeah.
with the oil stocks, there wasn't really the bounce that everyone was expecting.
Yeah, it came back down. Maybe because I asked you earlier, do you think it's because of these truce talks?
Yeah, and the market attributing less value to geopolitical shocks consistently now as to sustained moves.
And certainly seeing the implied volatility and the slow creep up still in play across the main indices. It's hard to see how that momentum is going to slow anytime soon. Also, Beyond Meat is up 1/3%, and
Beyond Meat, a forgotten name.
I know, right? Remember all the fanfare when it first IPO'd?
Well, completely, and these were the stocks before anyone thought of a quantum computing stock. We were talking about artificial meat and everything, and Beyond. Yeah, it's a cautionary tale, I suppose, of momentum stocks. And yeah, there was a lot of money to be made getting behind that, and the rally extended far beyond what anyone thought. But sort of reality has hit home. It's
Beyond Meat to me is a bit like I'm going to show you the share price, people. It's like the US version of Aston Martin.
The US, I don't think Aston Martin ever went up, you see. Beyond Meat
did go up and then came back down.
Aston Martin fell steadily from the off.
Yeah, you're right, you're right. Beyond
Meat, one would suggest, was a well-managed IPO. Aston Martin was a fiasco.
Here we are, Beyond Meat. And you can see that pop there when it first began. Oh my goodness!
You got it, yeah. You forget how long ago the excitement was.
Yeah, and then look at it now. Oh my goodness! And they're struggling. I've been reading reports about them trying to turn things around so it becomes a little bit of meat, not Beyond Meat.
Yeah, well, and of course everyone kind of understands it. To have a truly fair market and a truly fair share price, you need longs as well as shorts. Often post-IPO, there's not an ability to borrow, or borrowing is exceedingly expensive. before that kind of fair market develops with the shorts coming in and the borrow being available, you often do see the overextended move. I'm not suggesting that. Beyond Meat, yes, was exceedingly expensive to borrow, but even as borrow came in, a lot of shorts did get squeezed out. It was a difficult one, and the hype did continue for a while post the IPO. But that long-term view as to, and it's often quite difficult on the short side to take that view that this isn't the future, and I'm, going to stand there and fight against the tide, as many people found to their cost with Tesla. To hold on to those shorts, it's the hindsight. Yes, of course I was right, but the pain you suffer, on the way up is often too much to bear. It's that
you have to have that faith, and not sure any, most humans don't have that sort of faith for that long anyway.
Well, that's it. It's sometimes difficult, but it's one of these. Lots of people sit there and think Beyond Meat. Well, of course it was obvious. So you're never going to sell that many faux burgers.
Yeah, I should have got in and done a short, because I did try it. I always try, like Greg's. I tried their vegan sausage roll before actually buying into stock, because I couldn't tell that it was a vegan sausage roll.
And that made you buy the stock.
It almost
made you
killed
not buy
my
the stock.
husband. I also almost accidentally killed my husband, because I did the blind test on him too.
Yeah.
He didn't know he was allergic to corn. Anyway.
Oh no.
Yeah, there was almost a hospital event after that. But all was fine in the end. Speaking of all fine, let's have a look at the markets. They are still risk off there.
Although recovered, look at that. The DAX has a very strong. But no one was quite sure why it came off so sharply about 8:10, and.
It was down about 1.5, wasn't it?
Yeah. We saw a very sharp move after the opening to the downside on perhaps nothing or nothing apparent, and a bit of stability in there again.
Yeah. Keep an eye on the markers though, and the headlines, because I'm just getting breaking news coming through on my alert system, and it says here that Iran's Revolutionary Guards say a more powerful new wave of missiles was recently launched towards Israel. This is according to IRNA, and that was in the last few minutes. So keep an eye on that one. IRNA also saying that attacks against Israel, says the senior Iranian army commander, will intensify in the next few hours.
Maybe warfare's changed. I didn't think you announced your attacks on
It's something that they do as well to try and weaken the resolve, and if it doesn't happen, they might choose a different time. You see,
Okay, so
it's all about flood washing, darling.
Okay,
flood washing.
Got it. Modern warfare. I thought it was just drones, but it's still counterintelligence.
Propaganda as well.
Propaganda, yeah. Of course.
Right. Right, we're going to have to leave it here. Thank you so much.
No worries, Ange.
Being with us on the all sessions as well. Such a pleasure always to have you on. Lots of people asking whether you're going to be at the event on Friday. Are you going to be at the event?
Possibly not. Who knows?
Is the Iron Dome hair going to be
Iron Dome hair
at the event on Friday? Thanks very much, and stay where you are, because we have Batista. And is this Nick or is it Bat? It is Nick Batista with Rich coming up, talking about options. Stay with us.
Welcome back, everybody. In this series of interviewing the tasty stars, I've had the pleasure of speaking to Tom Sosnoff, Dr. Jim Schultz, and the legendary Tony Batista. Now, in that interview, we did discuss that the sequel is never quite as good as the original. However, in this case, I think it's more of an upgrade. Welcome to the show, Nick Batista.
Thank you for having me, Rich. I appreciate it. I'm excited to talk with you.
Oh, I'm very excited this end as well. So I guess, the first question we've been really asking everybody is, how did you get into trading in the first place? Was it, the sort of fatherly influence? Was that the discussions at the dinner table, or was it something that you naturally found a passion for already?
it's funny because growing up, it was really hard to understand what my dad did for a living. I always thought he went to work, and my idea was that he was just screaming all day, because he would talk about how, he would come home and his voice would be hoarse and whatnot. So I always thought that he was a professional screamer. So I really didn't understand what trading was until I got a little bit older. And, I was always interested in finance and in business and math. I was always on the math side of things for my school studies. And so it was a pretty natural progression. But, to say that I knew what trading was when I was younger, it would be completely untrue. It's one of those things where it's not often taught in school. There's no option playbook. There's no option related class. It's always just an investing type situation where they tell you, buy stocks for 10 years or 20 years or something like that. There's really nothing that teaches you.
At least you get that. We don't even get that on this side of the pond.
Yeah, exactly. I mean, it's one of those things that's really, really hard and that isn't readily available to people. So for me, starting off with Tasty and how I got into this was really looking for opportunities and starting at the ground level. I mean, when we started Tasty, it was a completely different company than what it is now. And for me, I wanted to follow in my dad's footsteps, and I was interested in what they were doing, and I saw the opportunities. And, it was one of those things where I just started at the, very novice level and worked my way up into the trader that I am now.
And so when did you actually start at Tasty then, and how long did it take until you were on the screen?
So when I was originally hired, Christy Ross, who was the CEO at the time, she pulled me in the office and she was like, we're excited to have you, and I'm excited to get you familiar with trading and the content side, and we're gonna put you on air next week. And so my first day at Tasty, they told me, and that, when I was hired just to be, on the support side and just kind of, at that time we were very much a startup. So everybody did a little bit of everything all over the place. And I was excited for the opportunity to get on camera, but I was certainly a little bit apprehensive and not ready for the big lights. But that's the way we do it here, man. It's trial by fire, and it's throwing things at the wall and seeing what sticks. And I think that's kind of what happened with me when I started, was that, the content wasn't as good as it is now, certainly, but that's how you have to start. You have to throw something at the wall and see if it sticks, and grow with the content through the experience of it. So that was really how I first started, was just kind of getting thrown on the show and learning as I go.
It is funny. You look back to the Tasty YouTube, and there's a video from 12 years ago, and it's of your father. And literally, it's as if I'm speaking to that person right now in front of me. To say that you look alike, there's certainly no question that you're adopted anyway.
Yes, no, they always say, your mother. The father you can't always be so sure of. The mother can't fake it, but I think Tony is my dad. I'm pretty sure of that.
Yeah. Now, what about, going back to the first day? So that was your first time on screen. What about before that? Had you ever found yourself in the limelight or on stage in your school days, for example?
And not necessarily. I mean, my first job out of college was in a finance related field. I worked in credit markets and debt, and so I was familiar with the basics of trading and the basics of financial markets. But prior to that, I really had no experience, on camera, and even in those days, not to date myself here, the social media aspect wasn't really part of the game, right? It was still, the early days of iPhones, and, Instagram was just getting launched. It was still Facebook and those sort of things. So there really wasn't anything. What about, there was no practice I had going into it.
What about back at school, like, drama? Did you take place in school shows and things like that?
Nope. It was completely a fresh start for me. But you know, I had always been
to show you one of these, Nick.
Well, I don't know what is it.
That's a kazoo.
A kazoo. There you go.
Because your father told us a story about one time that you were on stage at school.
Okay.
And you had misplaced your musical instrument, so you just went and stood on stage. So I decided to get you this as a gift.
Thank you.
And I'm going to give it to your father when he's across in London.
I appreciate that. And it was actually a recorder. So
Right.
it was the first instrument that we would play. I think this was like maybe like 3rd, 4th, 5th grade, something very early on. And so yes, my official first time on stage was certainly a fail. If we're counting that as the first time on stage.
But you still got up there. I think that was what your dad was so proud of. He's like, all right, he hasn't got his instrument, but he's not shy.
Yes, I was never shy. Certainly not.
Now, what's one piece of advice that your father's given you about markets that has really kept you, on track and the right way? And then maybe one bit of advice that wasn't so useful or accurate.
I think, the one thing that my dad has taught me throughout my trading career is just to not be afraid of taking risk. I think that's the hardest thing for people to get over, is the aspect of, not every trade is going to be a winning trade, and not every, situation that you're in is going to be a good situation for your portfolio. And I think putting risk on is really the hardest. Clicking the button is always the first step, and it's the hardest one for people to do. They overanalyze things. You read an article or you see something in the news and you think something, or that somebody else knows something that you don't know. Those are the things that go through everybody's mind. And for me, I think the point that really pushed me forward was understanding that, there's no reward without the risk. There's no risk-free trade. And so, my dad really taught me and pushed me to put risk on, and to put your idea out there, and to put your trade on. And sometimes they're going to be losing trades, and a lot of the time they're going to be winning trades, but you have to put risk on to really move forward with trading. And so I think that was one of the biggest keys for me. In terms of something that didn't work, I would say that sticking to not having your own ideas about trading. I think, we get stuck in kind of our tasty vacuum of mechanics, which are awesome. But at the end of the day, you have to have your own risk tolerance and your own directional assumptions and your own thoughts about markets. And so I think a lot of that, we get in a little bit of an echo chamber. We're all kind of the same traders. And so listening to other people can sometimes lead you astray if you don't have that same sort of opinion.
And what about trading stock? My background was an equities trader, market maker. What about just the basic trading stock as opposed to options? Is that part of your trading life, or is it mostly options?
I think the option market has really broadened out my outlook on investing and trading in itself as well. Options allow you so much flexibility to leverage and to size your positions much more efficiently than just stock. Like, it's one thing to buy 1 share of NVIDIA or 10 or 100 shares of NVIDIA, but to use options to get that same sort of exposure is so much more capital efficient. And so in my own personal trading, whether it be IRA accounts, a Roth and traditional IRA accounts, or my own personal money, I use options to leverage my, that know-how in options to leverage stock positions. And I think that's really, something that is really powerful, and especially for people that are on the younger side. And I know I've got lots of gray hair now, turning into the old Tony Batista here. but I think for people that understand options, it allows you a lot more flexibility and a lot more leverage to put positions on versus stock, which is just so capital intensive. And so I think through all my learning here, it's allowed me to kind of to leverage up that know-how.
And you mentioned, back in your early years, your school days, it was kind of hard to understand this job that your dad was doing.
Yeah.
If you were speaking to somebody now that found the options market difficult, whether it be a 12-year-old, a 25-year-old, or a 60-year-old, a lot of our viewers haven't yet made the jump from trading stocks to trading options. How would you describe the options world to them in a basic level of explanation?
Well, I think now the access to information is so quick and is so accessible that it's much easier to start now than when I started. When I started, there weren't, I was reading Shelley Natenberg's, Option Pricing and Volatility. It's a great read, but it's very, very dry and it's not very engaging. And now you have access to all sorts of information at your fingertips in the computer that you carry in your pocket. So I think that is a huge benefit to people just starting off. I think the easiest way to describe options, or at least get somebody started with options, is to explain that options are a small way to get exposure to something very big, right? So options, you can build option positions for a couple $100 in risk. And I know that everybody has their own risk tolerance, but from a size perspective, options allow you to get small. You can also get large with those positions as well. But really, the flexibility of options to build positions and size positions appropriately is something that's a lot more attractive than just buying stock. Like if I tell you that you can make $100 on being long NVIDIA, if you're buying 10 shares, you have to have NVIDIA go up 10% to make $100. You can make trades that have a similar sort of risk or use a similar amount of capital and benefit much more quickly from that sort of assumption using options. And so I think just the leverage aspect and the sizing aspect of options is really what's the most attractive part of trading.
And, a great strategy for a beginner, of course, is defined risk.
Yeah.
What would you say your favorite defined risk strategy is that you find yourself using time after time?
So for somebody just starting off, I start with put spreads, right? Just selling short put spreads. See, it's the most, most people are comfortable being long a stock. They say, I want to be long NVIDIA. What's a good way to be long NVIDIA? And I start with put spreads. I think that's the easiest way to start off and get exposure. For me, with a little bit higher risk tolerance, a little bit more directional assumptions, using diagonal spreads are an interesting way to get long a stock. Poor man's cover calls. These are ways that you can leverage option know-how to build more capital efficient positions. It's very capital intensive to buy 100 shares of NVIDIA and watch it move 10 or 20 cents a day or $1 a day. It's just not, it's not a good use of my capital. And so building a poor man's cover call or a diagonal spread, those are the ways that I like to participate in stock trading.
And then would you say that's developed over your time on screen and at Tasty?
I think so. I mean, of course, the hardest part is clicking the button, and I've mentioned that before. And once you start to take risk, it gets progressively easier to take that same sort of risk, right? So once the repetition of trading and the understanding of trading, and not just the understanding of like why a stock is moving, but the things that you can control about your trades, looking at volatility, understanding time, understanding some of the other more intricate Greeks like gamma or rho when interest rates change. All those things kind of get easier to understand, and you get more comfortable with them the more that you're able to put out risk. And I think as people trade, and as somebody starting off, gets more and more positions on, those things you become more comfortable with all those things, and trading itself becomes a lot more comfortable.
Great. Now, talking about being comfortable, you've got your own show now, haven't you? Options Trading Concepts, and walk us through what you cover in that show.
So Mike and I, we try to take higher level content and condense it down into a more simple understanding. So we take a lot of the strategies, concepts, trade ideas, all those things, and cover them throughout the week. We've started to incorporate a lot of special guests. So we try to cover a wide range of concepts, from FX markets to, commodities and futures. We have Ryan on for crypto, 3 trade ideas with Katie. So we try to cover a broad range of topics and concepts, and make them a little bit more easy to understand for those starting off. So I would say the range of content is very, very wide, from novice to advanced, but we try to condense it down and make it digestible for the viewers. And of course, the aspect of live trading is a huge part of our content. We're making multiple trades a day, every single day, no matter what's happening in the markets. That's always going to be a part of our content.
And what do you prefer more? Do you prefer the trading side? Do you prefer the on-screen side? Or is it a combination of them both?
I think it's got to be the trading side. I mean, I love trading. I love taking risk. I love analyzing markets and looking at volatility and trying to find opportunities, and taking, ideas from our chat and from Twitter and from people that email in, and building off of those assumptions, and just building that small little trading community that we have. That's a huge part of my show. I mean, I've covered a lot of the topics in trading. Iron condors, I've done it 1,000 times, but when the concept doesn't change. I think that's the hardest part for people to understand. And when they start trading, they think their iron condor is different than something I've covered 100 times. The concepts are all the same. It's the execution and the emotions and the things that you're trading around day to day that change. And I think that's, a huge part of our trading, is looking at our own trades, looking at trade ideas that we get from various sources, and showing how those things are moving and changing to the market right now, versus the basic concept of what is an iron condor or what is a short put. Those things are static.
And that kind of mindset, what do you think sets it apart from the likes of sports betting, for example? Do you love also getting into the companies and having specific views on companies, or is it just math?
I think it's hard. The math part of it is the thing that we can trade around, right? So the company specific, price PE ratios, new products, events, those things are binary, and the reflection of the stock movement is not necessarily what you would think from those sort of binary events, right? So Apple reports earnings and beats all their numbers, but the stock goes down. What does that mean? Does that mean that, they're not good numbers, actually, even though they are good numbers? Those things are random. The math side of trading is not random. We can trade volatility, and we could sell volatility when it's high. We can buy it when it's low. We know about time decay, right? As time passes, value decays. And so these are things that we can actually trade around. I can't trade around the reaction to Apple's earnings directly, right? I can make an assumption about changes in volatility and changes in time. Those are things that I can make assumptions on, but the actual stock itself is going to do what it's going to do. So I think incorporating and using the analytics side of trading, PE ratios or events or products, whatever. Those things are great things to incorporate into trading, but they're not necessarily my focus day to day.
I think that's what became obvious to me. I've traded options for 18 years, but I've never really understood options until I discovered Tasty. And first of all, playing around with the platform, right, getting ready to it, because it can be a little bit intimidating. But, you know, that took me 5-6 hours. But actually learning the mechanics and spending time with Sosnoff and listening to your father, I started to really get it. And my goodness, your P&L suddenly changes when you start to understand it. And it's really exciting. So, you know, this great thing that you guys are doing a TV show that is helping people not only really understand what they're trading, but helping them to increase their probabilities of making money and losing less money. You know, it must be such an exciting thing to be part of.
It's awesome. I mean, I love putting the names to faces. I think that's the one of the most rewarding parts of what we do here when we do our live events, and somebody comes up to me and tells me their YouTube handle, and I recognize it from our daily chats and the emails. You know, I've emailed with people for years, for 5, 6, 7 years, back and forth, just, you know, on all sorts of things, on, you know, food places that I should, you know, restaurants I should go to in whatever city I'm going to next, to trade ideas, to current events, to politics. I mean, these are it's almost like friends. You know, we've built this sort of network of like-minded people, of traders, of friends, and that's really an awesome part of this business is putting those names to faces in those live events and Twitter and all those other social medias that we use throughout the day here.
It is funny because we're building up a fantastic community on our own show in London now, and you recognize all the names, you recognize when there's a new name, but you also notice when somebody's not there, or if they've disappeared for a few days. You know, you start to think, oh, I hope they're okay, maybe they're on holiday. So yeah, I can definitely, you know, get that kind of feeling as well.
And that only gets bigger. You know, when we started, this was a small operation, and, you know, that's how we've always grown, is through word of mouth and building this sort of community. It's never, you know, it's never it's always organic. It's never, you know, a forceful type thing. You know, if you don't like the content, you don't watch. But people like the content and they tell friends, and those people, you know, it snowballs into a bigger and bigger community.
Yeah, and of course, as we know, there's Tony and your father. Tom, your father, and JJ, Scott Sheridan. So I would say, you know, they're maybe the OGs, but now as director of trading content, you're building up a new, you know, how would you describe yourself?
Next gen.
Next gen, yeah.
Of course. I mean, you know, the trading hasn't changed and will never change. You know, there will always be stock trading. There will always be buyers and sellers. There will always be markets. And so, you know, the content will continue on, whether it's Tom and Tony or Nick and Mike or Chris and Ilya or any of the, or Rich coming on. I mean, this will always go on, and markets will always be here. And so there's always going to be something to talk about in markets. And so I'm excited for the future, and we're building, you know, we have so many new hosts over the last couple years that we've brought on. And so, you know, the future of Tasty is brighter than ever. We're going to have more people, more shows, more content, you know, more things to trade. The trading space is only getting bigger. So it's going to be awesome.
Do you ever think what you would be doing if you hadn't come into Tasty?
Oh man. I've done a lot of different things. I mean, I worked in credit and debt markets. I sold cars when I was in college, so I was a pretty good salesman. But this was the perfect spot for me. I mean, it's the perfect blend of risk and sales and technology. I mean, there is so much that goes into this business that I couldn't imagine it. And really, the best part is that every day it's different. You come in the markets, there's something moving, there's a new stock on the board, there's an IPO, there's a new technology, crypto, there's all sorts of things that happen.
Man and the president are exchanging.
It's the greatest thing. I couldn't imagine coming in every day and punching a time clock and doing the same thing over and over and over again. That the fact that every day is different and there's new opportunities every single day, I couldn't ask for anything better.
And if we are looking forward 5 years, 6 years, 8 years, what would be your target? What would be the aim of where Tasty and Tasty IG would be sitting in that future?
I mean, I think the content will continue forever. That goes to the fact that markets are always moving. There's always some sort of opportunity, and everybody wants to be in on that opportunity. So I think the content moves forward forever. I think for us, really, the biggest key is to continuing to build technology and provide tools to people that aren't available now, and just continuing to broaden the access of trading and the technology and the research and the content and the know-how. Those things are how we continue to get better and better through the next 5 years, 10 years, 20 years from now.
Excellent. Now, before we go, please take this opportunity to give the show a plug. When can people find you? And we'll do the time difference so they can listen in from London.
You can find me daily, 11 to 12 Central Standard Time. And that's every single day. On Wednesdays, I'm on in the morning at 9:30 a.m. with Tom and Tony for Johnny Trades. If you're just starting off, you can check out that segment for some quick trade ideas.
Just explain that one for a second, because that really is a cracker.
Sure. So Johnny Trades is a somewhat, it's a Soz and Assault type name, right? It's kind of a compliment, kind of an insult. But for those of us that are just starting off trading, maybe you just got a couple $1,000 that you want to trade around just to start learning how to trade. Those of us that are taking small trades, right? Not everybody can take the big risk that Tom can take. That's what our segment is, or my segment is about. Johnny Trades is for those smaller type, newer traders, a reasonable amount of risk while getting started in option trading.
Great. So that's 9:30 Wednesdays?
On Wednesday mornings, yes.
So that's 3:30 p.m. London time. And then you're on every night at what will be 6 p.m. London time, I believe, on the Tasty Network.
Perfect thing to watch while you're eating dinner. Couldn't think of anything
It really
better.
is. And then by the time that Soz and your father come on, it's 8:30 p.m. here. So it's usually nice little glass of wine just as the market's
bedtime story. It's perfect.
Oh, can you think of anything worse? Well, you're the one who knows for real.
It's true.
Nick, thank you so much for joining us. Absolute pleasure to have you on Trade Live with IG. And we look forward to some point in the London when Soz and your father maybe aren't fancying a live show in London like they are coming up soon. Get your tickets now on Eventbrite. Sign up for the 20th of June. We're going to be showing this just before your dad and Tom are live on stage in London. But yeah, might we be seeing you across here at some point in the future?
I hope so. I plan on it.
Good stuff. Well, you've got my personal invite there. You and I can do the next generation show.
There you go, Rich. I'm with you.
Good stuff, Nick. Thank you. Have a good day.
Thank you very much, Rich.
Hello, trader friends. Welcome back. As promised, we have Piers back with us on the show to talk about all things tech. We talked about AMD before. You are still very, very bullish on the stock. Talk us through the latest view.
Yeah, so I mean, AMD we spoke about a few weeks ago when it was being downgraded by everyone and going through one of these AMD moments that it has. It's not a very well covered stock in the market. The analysts chase each other up, chase each other down, and no one ever really takes a view. So what's happened in the last, obviously we've seen a reversal in the index and the semiconductor ETF and all of the entire space. But at a stock level, AMD are essentially at a bit of an inflection point, right? We all know that these guys are the only ones in the world, apart from NVIDIA, who make GPU accelerators. They're the only one with the technology, the intellectual property, and the leadership through Lisa Xu to actually have any form of chance to take market share from them. And they had an AI event last week where they explained all these new products, and Lisa basically said that some of their chips are actually faster than NVIDIA's, and I'll take her word for it. She's a first-class operator, and certainly not. She doesn't exaggerate what she's doing or saying. It took a little while for the market to digest that, and then there was a note out from Piper yesterday who essentially said this is an inflection point, but that was part of the price action, along with the rest. Tech and semiconductors were rallying yesterday anyway. But the really important thing that was yesterday was David Faber, who's one of the more reputable journalists out there on CNBC, said that the read through was that they are going to get an Amazon AWS deal. That would be somewhat of a revolutionary moment because at this point the hyperscalers, obviously the business all goes to NVIDIA. So they did a deal with Google Cloud about 2 months ago, but that's for the CPU. This is GPUs. Lisa Xu said we're just going all in on GPUs, which is, so if they can do to NVIDIA what they did to Intel, which is gradually bit by bit take market share from them. No doubt NVIDIA will stay the kings, but that's fine because they've got 90% market share or 93% market share in GPUs. And if AMD can move their number from 7 to 20 or 25 over the next few years, this stock's going in one direction. So, the chart is pretty obviously
it's drawn an uptrend there. And so, Piers, does this mean that your base view is much of this is not yet reflected in the price action?
I think the price action is a combination of factors. It's everyone got very, very bearish at a similar time to when Trump was doing all of his tariff announcements and everyone thought the world was ending. And then so a lot of that is simply people just realizing that the world isn't ending, and the semiconductor space in general rallying, plus their numbers were better halfway between the bottom and the top of that. We had better numbers. So people have been scrambling and upgrading. So it's a combination of factors. But in terms of them getting an AWS deal and them getting a foothold in the GPU accelerator space and taking market share from NVIDIA, that is not remotely priced into this stock, in my view. The market's getting a bit extended, particularly in the semiconductor space, and we can talk further about that in a second. AMD is no exception. Yesterday, up 10% on this news. The bottom line is that once we settle down, have our consolidation, have our pullback, whatever it may be, if you're taking a 6-12 month view on this stock, I think it's probably very likely that it ends up, as market permitting, a lot higher than where it is now. 150 seems to be a relatively straightforward trade from here. So
you preempted my next question. How
150 would be my short-term target, but then longer term, I think the all-time highs are going to be taken out because this company, as I mentioned, are the only rival on earth, apart from the Chinese, who claim to have a bunch of chips, but who knows whether that's actually true or not. We don't have any real evidence of that yet.
Now we've got
in the GPU space.
Yeah, we've got a long list of tech stocks that we have to cover and others today. Let's move on to Plug Power, shall we?
Yeah, I just thought I'd mention Plug Power quickly because when I was on the show a few weeks ago, I made a poorly timed call on this, although with the caveat that it's a highly speculative and volatile stock. So I think we were trading around 100 at the time. It then fell down to sort of 85 area. Bottom line is there's been 2 bits of news on this stock. One is that the CFO has bought a large chunk in the open market. They haven't, the management of this company haven't bought shares since 2019. So that's a pretty significant endorsement. But more importantly, I think than that, they won this partnership deal with Allied Green Ammonium. They're in Uzbekistan, $5 billion deal, which is essentially going to help their balance sheet out significantly. And the balance sheet is the reason why it's been trading as it has been trading. 35% short interest, volatile, speculative stock. So keep that in mind. But at the same time, the short squeeze in this stock is on. I mean, we've seen it go up 70% or something, or whatever it is, off the lows in the last few weeks. I think again, 150 is a popular number this morning. 150 should be relatively straightforward. I think that this stock can get back to 2 and maybe even 3 without too much trouble, as long as they are staying a going concern, and that's the reason why they're trading as they've been trading, because the balance sheet's been an issue. So that's interesting.
I'm going to also mark out, whilst you're talking, the 650,000 shares that Paul Middleton bought was at 103. So I'm going to try and mark that out for you here. Not exact science here, but there you go. That's as close as I can get there. Plug Power also, as you say, very volatile. But you know, are we in a place now where, you know, the only way is up or creeping up because it's building out its integrated green hydrogen operations? Are we in the clear for any more volatility? Or
no, absolutely not. And let's just be crystal clear: we're never in the clear for no volatility for Plug Power. It's Plug Power, right?
For the short term.
It's a highly speculative stock, highly volatile stock. There's one more thing. There's a green energy bill in the in the US, which a bunch of senators are trying to get behind to block. So it's to hand back the hydrogen tax credits to these guys. That would be another kicker for them. But the bottom line is that they are not going out of business. They're trading as if they are going out of business. It's a short squeeze trade.
Yeah, this is the thing. Lots of people message in Piers and Co. They trade like they are going out of business.
That's what I've seen. We've seen it before many times, right?
Yes.
And
zoom out there for you. It's quite. And that's the monthly view, but going back to the daily and zooming out there for you. So it's an interesting one. Interesting.
Yeah, listen, it's a speculative. I wouldn't bet anything more than 10% of what you've got in that stock, but it's worth keeping an eye on.
Let's move on to the semis now. We've got an ETF that you have in mind. Let's put that up.
Yeah. So the semiconductors, just going back to the original conversation on AMD, are just really the beating heart and soul of this market right now. Okay, the SMH in the US, which is obviously the big Vanguard US semiconductor ETF, has had a V-shaped reversal and is leading the market again. Yesterday led the market. Price action's phenomenal. I mean, just look under the hood of that thing. Micron. Okay, Micron is a stock which is very cyclical. DRAM, memory. They haven't been involved in AI. Their revenues all over the shop as a result of their cyclicality, but they were trading as if they were going out of business, literally not that long ago. And then they've had a 60% V-shaped reversal and a breakout like I haven't seen in a very long time. That chart doesn't do it justice, the one you've got up there. I mean, the breakout is more aggressive than that. Anyway, so the point being is that it's very rare to see a stock that's an economic bellwether in a cyclical name like this in particular that has such an aggressive technical reversal and breakout that doesn't get followed by more gains. Now, it's very overbought, as are many of the other names in the SMH, so I wouldn't be surprised that we see consolidation in the short term. But that stock is now, and they won a contract with NVIDIA to do memory with them, which is something that they've never done before. So they're now in the AI game, and they're growing at 40% for 15 times earnings. Now, I don't know, I can't think of another semiconductor in the whole market that's got 40% growth for 15 times earnings. So they're like a value stealth trade on AI, and they're leading the market. And then just quickly, still on the semiconductor subject.
Micron?
Micron, we did Micron. On semiconductor and Infineon, that are the two industrial semiconductors that I wanted to mention.
There we are.
Industrial semis, for obvious reasons, have been lagging all the AI capex stories. Because they're economically sensitive. The data's kind of been bottoming, and we had an update at the Bank of America conference not that long ago, 2 weeks ago, from On Semiconductor, who, if you bring up the chart, they've obviously been in the doldrums for a while, but building momentum, who essentially said that autos are bottoming, industrial bottoming, and if we heard similar updates from Infineon and ST Micron, so the industrial complex is improving and now contributing and participating in the SMH. So the SMH now has AI, which we all know about, and it has now the industrial semiconductors. And then BE Semiconductor, which is my favorite European semiconductor.
Yes, you talk about this a lot.
This is a name which, amazingly, not many people even know what they do. I'm sure they've seen the name and they probably think, oh, that's the other European semiconductor. These guys...
Putting that up for you. Here we are.
These guys are really very interesting. They do a thing called hybrid bonding, which is essentially their customers are the equipment, semiconductor equipment guys, and the foundries in particular. Who make the chips. And these guys help them, to put it in very, very layman's terms, they help these guys with a brand new technology that's only being used by 2 of the foundries out of the big 4, called hybrid bonding, which means that they can bond the wafers at a smaller scale with more efficiency. And Applied Materials, which is one of the biggest equipment guys in the world, a direct competitor with ASML, bought a 9% stake in them a few months ago, putting them on the map somewhat. Since then, they've had about 9 upgrades. They've had a big guidance raise just the other day. For me, this is the #1 European semiconductor to own for all those reasons, mainly because no one even knows what it is, which means that there's so much upside.
Interesting that all the charts that you've talked about so far, Piers, have that V-shaped, really sharp V-shaped.
Well, I mean, that's semiconductors, right? I mean, semiconductors were getting hammered prior to the tariffs, because we were seeing a rotation into value in Europe, and the big semiconductor space that was very over-owned was having a correction. Then we had the tariffs, which pushed it even further down, and then everyone realized, hang on a sec, the tailwinds here are exactly as strong as they were before. So we've seen a powerful V-shaped reversal in pretty much everything.
Right, loads to get through. Meta, let's go on to Meta now.
Yep, Meta, worth a mention. They obviously came out yesterday with the WhatsApp monetization that we've talked about for years and years and years. They're doing it in a stealth way. In other words, they're putting it in the updates tab. Not so when we read that news, I thought, oh my God, we're going to have ads in our chats. They're obviously not going to do that. But what they are going to do is put it in the updates tab. So they will be monetizing WhatsApp so that they can help fund their AI ambitions, which are obviously going to costing them a fortune this year, right? They've got the AI capex for the hyperscale business, and now they've been buying companies as well. They bought that company the other day for $15 billion.
So how does it work? Do you have to choose the update and actually
So when you
click?
go into the tab in WhatsApp to set up your own channel or change your details and all that stuff, to be honest, I don't even think I've ever even used it. Maybe I have, I don't know. It's definitely, it's a function for people that use WhatsApp, I think mainly for business. And when you've got your own channel and that kind of thing, there's a tab on the thing that says updates. So you only see the ads if you press that button.
Right.
So which is good for the general user, I guess.
Yeah. I'm surprised it's taken them so long, because if you use the WeChat AI shopping assistant, you could be on any video, you could be watching, peers talking about tech. And as long as you're using that WeChat function, it can even tell you what shirt you're wearing, whether you want to click on the link to go straight to a shirt that looks like this, and it will be sent to your house. You just click buy, that's it.
Yeah, I mean, it's great. And listen, Meta are they're getting away with their capex this time, right? If you remember what happened when they said they were going to spend billions of dollars on metaverse, and the market said no, thank you very much, and the stock went down 60%. This time around, they like what they see, they like what they hear, but this stuff needs to be paid for, right? These guys are spending billions of dollars on AI, and at this point, they're not really making much money out of it. The core business obviously still has the eyeballs and the ad dollars, but are they making money out of AI yet? Absolutely not. Are they at the forefront of it? Yes. And are they doubling, tripling down on it? Yes. So they're using this, I think, to monetize. The market loves it. It probably makes it back to the all-time highs. Meta can't do anything wrong at the moment. For me, ho-hum, like it needs to calm down, I think. Google, in the same breath, needs to be talked about.
Yeah, trading around.
Dead money, value trap. I don't know which way you want to talk about Google at the moment. It's one of the greatest companies on the planet, but they are going through a transformational moment with the search business. We all use AI, whether it be Grok or Gemini or ChatGPT, Perplexity, whichever one you use. The way people search for stuff and get information online is changing dramatically. Google are at the center of it. They have partnerships with Perplexity. They have their own AI product. They have AI ad strategy, which is it's like an algorithm that uses search and then uses that data for targeted advertising. So net, it's kind of a small win, but the whole landscape has shifted. So they now need to lean into cloud, which is making progress. They need to lean into their self-driving business, and they need to lean heavily, which they are doing, into the AI strategy. But I just have question marks. The growth for this year is -5%. If anyone wants to know why the stock's not going anywhere. And next year, the expectation is for 11%, which is okay, but they need to get that up into the mid-teens. Otherwise, we can have this argument about Google being cheap for the rest of time, because they're going to be cheap for the rest of time unless they get the growth. So for me, it's just like wait and see what happens with Google.
Currently, it's trading at 175. Where do you think it ought to be?
I think I don't know. I don't know. I mean, I think Google's probably exactly where it should be right now.
My concerns at the moment is with the perplexity, with Gemini, with all of that.
Yeah.
Won't all the eyeballs then go to that search,
well,
right?
This is the thing.
Yeah, and then suddenly no one wants to use Google.
Well, this is it, and this is where we need to get into the very technical functionality of AI ad searches, right? And I've done a lot of reading on this, and we don't have time for me to go explain it, but it is. Go away and read about AI ad searching, right? And come and try and form your own conclusions about it. It's a bit nuanced.
I'm keeping him on a tight schedule because we've got tons to get through. Monkey Man, I know you want to know about Tesla. Tesla, here we are whacking that up.
Well, Tesla is, they have quite possibly one of the most important days in their lifetime coming up this weekend on the 22nd.
The taxi.
They're doing a live robo-taxi in Austin, Texas. This stock has been all over the shop and proven more than it's ever proven in its lifetime what it really trades on, which is robo-taxis, robotics, power, the future.
Space.
Cars and Musk's personality and ups and downs with Trump. I mean, we saw the stock go down 16% on a breakup with Trump. Someone actually downgraded the stock on the back of that, which I just thought was insanity. The next day or the 2 days after, of course, they're friends again. The stock's back up where it was. But now we can focus on what matters, which is the robo-taxis this weekend. If one of them crashes into a building, the stock's going down 15%. If it's perfect, stock will go up 15%, maybe 10%, I don't know. Point being is that it's a very important weekend. Musk has been practicing and doing laps and all this stuff. It's a huge moment. $50,000 a car per year times $1 million, $50 billion in potential revenue. This is critical for Tesla.
We also have their earnings July 21st, I think. So.
And we have, correct. Yeah. There we go. And I mean, the earnings for Tesla, in my opinion, are irrelevant at the moment because cars, we all know cars are bad. In fact, we get a new number every day. French sales are down 50, European sales are down 60, and the stock goes up. The stock does not trade on cars. In fact, the best way to look at this is that cars are to Tesla like books are to Amazon, right? And a friend of mine said that to me.
I was really interested. I read your piece on Tesla and how it is going to build in Starlink and how we could have potential for Tesla to sell a movable Iron Dome type facility. Service.
No, exactly. I mean, this is like the Tony Stark comparison. Listen, what Tesla have got, Musk has got ambitions and a brain bigger than most of us on planet Earth. So all I would say is that I wouldn't short Tesla ever, unless of course you're going to do it for a day and then expect to get hosed the next day.
CoreWeave.
Yes, I just want to quickly mention CoreWeave and Palantir in the same breath. Very different businesses, very similar scenarios to a degree. Palantir, I've mentioned a number of times. I mean, listen, I don't. Getting emotional about stocks is a pointless exercise. But
he was here bashing the table before we started.
It's trading on 102 times sales, guys. I mean, this is 3 times more expensive than any of the large tech companies in the world have ever been in their entire lifetime. And it's got 28% growth, which is not that great. So unless they're going to have a ChatGPT moment at some point, which is an explosion of revenue overnight, which I can't see where that's coming from, then this stock is miles too high and it's run purely by cults and retail options flow, which fine, I get it, I respect it, but from a fundamental perspective, it's just way too expensive. And I use that as a point of reference for talking about CoreWeave, which is probably the hottest stock in the world right now. Most interesting stock, I think. Recent IPO, it's up 290% since the IPO. Every dip gets bought on volume. They're a bit of a battleground amongst the fundamental professionals out there because not that we matter at all in this stock because it's being run by retail people. 25 times sales, so it's 1/4 1/4 the price of Palantir, even after a 290% rally, but they have $11 billion worth of debt, which is very unusual for a tech company, but that's because they're capital intensive. They have to buy the chips off NVIDIA, buy the data centers, and then rent them out to the hyperscalers. So it's great for the customer and ultimately great for them on the top line because they got 100% revenue, but it's capital intensive. So if you want to be fundamental about this, they have an awful balance sheet and they're overcooked. But if you want to be positive about it, they're very, very cheap versus Palantir. And if they can continue to grow sales at 100%, bring down that debt, then potentially this is one of the biggest companies, in the market in the coming months and years. I don't know, but it's right now. It's just like what, and the borrow this stock to short it costs 150%. So you can't short it, you can't buy it unless you're, well, you probably can if you don't know anything about the market, you just want to keep buying it. But it's just, I just like it's get the popcorn out and watch it.
And it's got this interesting, business model as well, which I find fascinating. It's like kind of the Airbnb of.
Yeah, I mean, it's a brand new way. I mean, just for the viewers who don't know exactly what they do, they literally buy the GPU accelerators from NVIDIA, they warehouse them, and they rent them out. So Amazon.
They're tier 1, tier 2, or tier 3?
I think they do the whole lot. Amazon came out the other day saying they were lowering their prices, right? That's a direct result of CoreWeave. So it's very good for the hyperscalers because the hyperscalers are now getting these chips cheaper and just for the whole space. But it is interesting because most tech companies don't have lots of debt, and that these guys have had to build the data centers, and buy the chips. So
now, is this dangerous given we know how fast the tech is moving these days?
Yeah, it perhaps, yeah. But I mean, I suppose it's adaptable as well, right? Whoever's chips are the hottest thing in the town, they can probably adapt and buy them. I don't know. I don't think anyone knows too much right now. It's a very brand new. Well, in the market, they're very new. Everyone's just kind of becoming accustomed to them.
Interestingly enough, CoreWeave was originally known as Atlantic Crypto.
Sorry?
They were originally known as Atlantic Crypto, yeah.
God knows.
But they've kept true to their blue blood. They focus on GPU leasing, but then it was as a crypto mining outfit.
Yeah.
Right. Up next, Kering. We're moving on from chips and tech into a big mover yesterday. Kering has eased off now after that huge move yesterday.
Yeah, so Kering I just think worth mentioning. I tried to buy these a while ago and got completely hosed and had to stop it out because one of the best companies, one of the best brands in the world, but Gucci has obviously had a shocker, and the leadership, quite frankly, has been substandard. Françoise Pinault, the current CEO, who's one of the French elite, who has essentially just dropped the ball. So what they've done is quite an extraordinary move. They've hired Luca De Meo from Renault, and he is. You might be asking what on earth do autos and handbags and luxury and couture have in common with autos, and obviously the answer is zero. But this guy is a first-class operator. Look at Stellantis, look at Volkswagen, and then look at Renault. Right, since we had the shameful exit of their previous CEO, and look at what he's done. He's doubled the stock price, he's doubled their margins, and he's killed the competition. So he knows what he's doing in terms of running a company. I think running a company at his level is a transferable skill, albeit there's a hell of a lot to prove. So we'll see what happens. But I can understand why this has happened, right? First of all, he's also in the French elite. These guys are, they lunch together and they laugh together, and ultimately, they keep it within it. It's a mafia. So it doesn't surprise me. But this guy knows what he's doing, so it'll be very interesting. The stock price reaction yesterday was aggressive, but bear in mind, Kering is trading again, not like it's going out of business, but because it's obviously never going out of business. But these guys have been absolutely hammered.
I even drawn a wedge there.
JP Morgan's probably the most bearish analyst, and she called it very well, to be honest with you. But she's still saying sell the stock now, right? The sentiment is so bad, and they've got a lot to prove. But if they're going to hire someone, they've hired someone to do the opposite of what's going on now, right? To come in and go, right. And he's taking a foot. But before he had a CEO with 2 CEOs underneath. Now there's just 1 CEO, and Françoise will stay as the chairman, but he's going to stay out of it, according to him, and just let Luca get on with it. So we'll see how that pans out. But it's an interesting story. I bought some in my trading platform alpha that I did for clients the other day, and I'm going to trade it at least, just see where we go. But there's not to the downside. It's pretty de-risked, I think.
And actually, you'd argue that this is what the company needs, given that they have tried in the past to revive the brand, but failed terribly and just cheapened a lot of brands, including Gucci as well.
Yeah.
With Luca Di Maio, he has had a very strong, as you say, track record. Because not only was he at Renault, but he was also at Fiat and Alfa Romeo as well, I think.
He's a veteran.
Yeah, he's a veteran. So that's Kering. Let's have a quick look at Estée Lauder.
Yeah, Estée Lauder may seem random, but to me it's not random. These guys are part of Fallen Angels, if you want to call it that, basket of US companies that used to be darlings.
Painful.
Big brands that we've all heard of. They've had a huge, a bunch of company-specific issues and market-specific issues. Company-specific, they failed to go digital. They failed to engage in celebrity boutique brand endorsement. The makeup business has obviously been booming with all of the celebrity endorsed brands. Nike have had a similar fate, but similar but different. Estée Lauder have been struggling with China for obvious reasons, right? The Chinese economy and the kind of Chinese consumer, and also the small brands in China organically. So it's been a whole bunch of bad stuff going with Estée Lauder. China's kind of turning a little bit in terms of the consumer. We saw some data out the other day. I mean, it's all over the shop, but there seems to be an inflection point. And with the stimulus that's just completely and utterly going to be coming more behind. I would not be surprised to see that continue. That'll be a critical part of this. But also just, there's a whole group of these companies that have just been, and this one's kind of right up at the top of the list, dead and forgotten, right? And Estée Lauder is a fantastic brand. They've just lost their way, and we'll see. But it grabbed my attention yesterday because it was up 8% on no news whatsoever beyond China data, and then it's testing the 200-day. If it gets through that 200-day moving average, it's going to be quite interesting because it hasn't been through there for a while.
So for those of you that use moving averages here, what I've done is you can change it to whatever you like. Just go into the menu bar, hit that button there, go to moving average, and then once you've got that on here, you can just go to the bottom left-hand corner and change it to whatever you like. For this purpose, we're going to put it on 200 on that red line there, and you can see it has crossed above that 200-day moving average, and it is also above the 20 and the 50 as well. And taking a look at the closer price action, it has been tracking higher since around the beginning of April, and we are starting to see some signs of life in Estée Lauder.
Yeah, I mean, it's got a lot of work to do. I mean, if you're looking at that chart there, we're still miles away from breakout, but it's getting interesting. I'm keeping a close eye on it. They do need to do some. They need to show us on a conference call that they're making inroads with regard to the strategy for sure.
Do you remember when they used to be on every billboard in every?
This used to be one of the top stocks in the world. Absolutely, just a darling that could do nothing wrong.
Yeah.
It's interesting to see how it's, how they've. A strategy can, leadership can send you down that badly. But anyway, we'll see. It's interesting.
Hims and Hers, that's coming up.
Yeah. Oh dear.
Right up. Yeah, Hims and Hers.
Is that still red pre-market by 40 basis points?
Yeah.
It's just, listen, this is a really interesting story. Quite frankly, they fit into the meme stock category, which means that talking about them is pretty much pointless from a fundamental point of view. Because the retail guys, if we have a headline in 5 minutes that they have bought a company, that it happened the other day actually, they're moving into Europe, so they bought a European company. Stock's
French,
up,
right?
A French company.
Think, yeah.
The stock's up 25%, right, in a heartbeat, which is the retail guys jumping all over it. It then, I might add that it was up actually, 19% on the highs, but it was 25% off the low. It closed the day red, right? So the volatility in this stock is insane. Eli Lilly came out the other day and said they're not going to collaborate with them or any of the other copycat guys because it would taint their reputation. Market has ignored that, although I think that's, I don't understand why. It's a battleground stock. Bank of America came out the other day reiterating their $21 price target, which is a hell of a lot lower than where we are now. And you know, there's, I think the highest price targets, which again are just guessing, are, you know, everyone's just guessing on this stock because it's in the early days of its lifetime. I've been trying to short it because I just think that it's in the short term completely overcooked. But again, trying to short meme stocks is one of the most stupid things you can do. So I certainly wouldn't listen to my recommendation on that. But I do think the stock is too high. And if we do step into a market correction where risk appetite takes a back step, this is going to get whacked.
Slammed, yeah.
So that's that one.
The other thing about hims and hers is that you know, it's not making inroads into making these big deals with the more traditional pharmaceutical stocks, and it's expanding big time. Zava is the name of that telehealth company, but it's also remains to be seen whether or not it's going to keep seeing this growth in its weight loss offering.
Yeah.
That is considered cheaper. I thought they were very clever with their. Do you watch the Super Bowl advert?
Yes, well, that was what kickstarted this entire retail frenzy.
It was very clever that they kind of went with the whole, we're for the people, right? We're not for those who
that's the point, right?
So much money.
They're trying to take on Big Pharma.
Yeah.
And it's very smart. The people who run the company, they know exactly what they're doing, and they're tapping into a younger generation of not just the product themselves, but the market, right? And the Super Bowl ad you just mentioned, it was so smart. It was mass exposure. The stock went up 30% on the back of an advertisement.
Yeah.
I mean, that's the kind of stock we're talking about.
That's incredible.
It's crazy.
Marketing top funnel.
I mean, imagine if McDonald's could do an ad that sent their stock up 30%. I mean, it wouldn't happen because it's not a meme stock and no one cares. But it's interesting, right? And we live in a market that's not going away. You know, and it needs to be factored into every conversation.
Right.
You need to separate out the stocks that are being traded heavily by the retail guys. 250,000 of them with a combined buying power of about $250 billion makes them bigger than any hedge fund in the world. Targeting stocks that generally are not that liquid. They're not targeting Apple, they're targeting HIMS. $13 billion market cap, right? They can move these things like that.
Yeah.
So you've got to be careful.
Right. And Cam, you're saying something to me earlier on? Apparently you've got to go, otherwise you're going to be cycling madly.
I do, yeah, I've got to go.
On a line bike or something. Right, thank you so much for being with us.
Yep, thank you guys.
And we're going to say goodbye because our trader friends are going to, they have so many questions that were on whilst we're on the show, but we will get that answered for you the next time.
We'll do questions next time.
Yeah, but that was great. We got that all in. Well done.
We got it in. But next time we'll do more questions. Sorry we didn't get to that, but I've got to run to a meeting.
Yeah. All right, take care. We'll see you tomorrow at the same time, 7:30.
Nothing matters. It's Monday, June 16th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Ratigan in Milan as we take you through the rest of this trading hour. Futures market closes at 5 Eastern, 4 Central. If you're joining us on the platform on tastylive.com, welcome back. Thanks for tuning in. Come over to YouTube. Tell us what you think of the dip buyers today in full force, completely round-tripping the stock market to where we were last Wednesday when I had the pleasure of seeing everyone last time. We settle in basically, Ilya, where we were during Futures Power Hour today. Nasdaq at 22,168. This is effectively where we were at 1 o'clock, Ilya, when you and I were talking about how Wednesday's close was 22,125 or so. The market holds on here today, despite a torrent of headlines coming out of the Middle East, of course. Israel and Iran are continuing to go after each other, and all indications there could be some more launches here, I suppose, this evening, U.S. time, going into the early hours of Tuesday in Israel, Iran. So that continues to be a problem for the market, problem for people everywhere, quite frankly, but this is a market show, so we'll try to keep it focused there. The market doesn't seem to care today, though. Nothing matters, apparently. Doesn't matter if two countries, one that has a nuclear bomb, one that's close to achieving one, are lobbing missiles at one another. Not going to be a regional conflict. Putin saying that he's not going to interfere or intervene on behalf of Iran. You're seeing Hezbollah say they're not picking up arms against Israel. Market doesn't seem to care. So stocks here, basically where we were mid last week when we had a last chance to interface Ilya, 60.89, a little bit more than that after the close here, 60.93, 1% advance or so for the S&P, 1.4% for the NASDAQ. Russell's up 1.21. Before I go to you, Ilya, because you and I talked at basically these exact same levels earlier, Dylan, we're now on the other side of this weekend. What have we learned here about this conflict? Because I could have gone to sleep since last Wednesday, and the market seems like it's pretty much unchanged.
I mean, this is sort of the greatest test of my hypothesis from last year, which is Middle East heat is an opportunity to get short oil and buy the dip. And I mean, this is the hottest I've seen it. I think anybody's seen it in some time, maybe ever, in the context of sort of the technology that they're using now. And it's really, you know, both nerve-wracking, heartbreaking, anxiety-provoking, all the non-financial emotions are maxed out. But again, whether it's Russian rhetoric, American rhetoric, NATO rhetoric, Saudi rhetoric, I mean, I think the only rhetoric that came in with any real the only headline I saw that was sort of not in their own way de-escalatory was Pakistan, who basically said if Israel uses nukes, that Pakistan will step in on behalf of Iran. But I think this is sort of the ultimate test of the, you know, fade World War III trade. Mm-hmm. But I think it's also a validation of the extremely improbable nature of World War III, even in the face of open missile conflict between Tel Aviv and Tehran.
There's open missile conflict. Ilya, oil gapped open higher to start the week. That's what we're looking at here on the screen, CLQ5. It top ticks above $75 a barrel. It settles in right now. It's at 69.80. We had some headlines over the course of the day where maybe Iran was looking to de-escalate. Netanyahu said on ABC that he's not ruling out trying to assassinate the Ayatollah.
Right.
So there's obviously still a lot of risk here. We're not going to see the missiles stop flying anytime soon, it appears. But the market, you know, we see the volatility come in. We have a high tick of what, a 115 IVR here in oil, 115.89 to be precise. And now we're back at 98. So I know this is, I really don't like the overtime shows that we do. And quite frankly, I'll just admit something. I don't like doing the programming on air when we have these geopolitical flare-ups, because we have to, our job here is to provide as much objective insight to what's happening to the market as possible. And we're talking about ways to make money on death and destruction, which feels callous. So I would just say, as I said on Futures Power Hour, Ilya, if you don't like trading the Middle East headlines and you don't like trading these, you can't trade energy right now in any capacity. Okay, but if you set that aside here, you had a remark in October 23, shortly after Hamas attacked Israel, about how markets tend to benchmark these things. Even as the images on our screens get worse, even as they get scarier, as Dylan says, they induce anxiety.
Sure.
So has the market decided today that we've benchmarked this risk?
I think the market has decided that this risk is what they benchmarked when this same thing was happening last year, or at least they've decided that for now, last year and this year are the same thing. And obviously, as we said earlier in the day, wars are nonlinear. You never know exactly what's going to happen. In particular, in the case of Iran, you have a very significant network of proxy actors and a clandestine network that's very, very broad, and not only in the Middle East. I mean, certainly a lot of their levers, like Hezbollah, like Hamas, like the Houthis have been meaningfully neutered. But the network is still significant. So we look at this and we say, okay, well, what kind of character might this thing take on ultimately? Difficult to say. But it looks like what the markets are doing here is basically saying, right, last year we had these two countries shoot a bunch of rockets at each other. And after about, let's call it 4 volleys, ultimately, that was it. It's looking like the market is essentially assuming that's the world we're in here. And for now, that's a tradable thesis. I think fading this move in oil looks increasingly attractive if you want to essentially presume that the markets are right about this. But if you're not prepared to sort of embrace the idea that wars are non-linear and nobody knows and dislocations can happen very quickly, well, then you probably don't want to be participating in the asset class in general, to your point. This is not something that's being motivated by this or that competing understanding of economic growth. This is headline by headline stuff. So at the moment, it looks like the markets have decided that this is last year. Will it stay that way? You never quite know with these things.
Here's the good news, though, Dylan. The way that we're talking about trading this means that we think there's going to be less death and destruction. Because if we're thinking that we're calling for a top here in oil and a fade off the move in geopolitics, it means things calm down, right? So we're not betting on the missiles flying. If anything, we'd be betting on the missiles stopping flying in some capacity, or just generally speaking, that vol is overcooked at a 98 IVR around these levels. I wonder how far they go, though, Dylan, because I couldn't help but notice the name of this operation is called Operation Rising Lion, which for those that have looked at an Iranian flag pre and post fall of the Shah and ultimately into the Ayatollah regime, you would notice that there is a lion on the original Iranian flag. And so this is kind of it feels like it's a call for regime change. Also, Netanyahu has called on the Iranian people to rise up in the streets and overthrow the Ayatollah. So it sounds like regime change, and I'm one of those, if it like walks like a duck and talks like a duck kind of people, I'll take it.
I'll even layer onto that, you got Musk tweeting out the Starlink beams Iran rhetoric, trying to bypass the communications blackout in Iran and trying to sort of, basically doing his part to support a rebellion in Iran.
It'd be an interesting play on words, of course, because the Jerusalem lion is a very sort of standby Israeli symbol, both in ancient times and currently. So it would be an interesting double entendre to say that, we're talking about the rising Israeli lion because that's symbology there, the Lion of Zion, as it were. And we're talking about maybe the symbolism with Iran and maybe some nod to a previously very collaborative relationship between Shah era Iran and Israel. They were allies at the time.
Dylan, I can't help but wonder if there are implications for the Ukraine war throughout all this as well, because we know that Iran's been supplying a lot of drones to Russia, which also I suppose is like an interesting twist about this whole thing geopolitically. For those that follow the contours of this perhaps the way that I do, the European Union was a lot keener on getting Israel and Iran to de-escalate in the past. They have been quite mum's the word this time around. They seem
I might
to
say they're almost endorsing, almost.
Right, and would go to show perhaps they're just, Iran, you want to keep providing these drones to Europe and we keep up spending money to keep Russia out of Ukraine? Like, you can send your drones to Europe. We are not going to tell Israel not to destroy your munitions factories because they may be taking care of a problem for us, right? And if Russia's getting less drones from you, then that's less death in Eastern Europe. So that's exactly what we want. there's a lot of contours here that are interesting to follow right now. But the lack of reaction here in the stock market is, again, I wouldn't even call it jarring at this point. We've seen previous episodes. Oil has certainly reacted more, and this is the great paradox of these recent events. The stock market took it harder on the chin in March and April of last year during a smaller rise in oil than it is right now.
I mean, don't you feel I feel like oil and the stock market have been pretty well disconnected for some time. I can't even explain why, but think about the tariff madness in April when it was sort of an economic apocalypse and to seizure of all global trade as a result of the mega tariffs. And oil was pretty indifferent. And now you have, World War, you have the sort of Middle East escalation, I'll just call it an escalation. And oil goes cuckoo bananas. And the stock market's indifferent. And to your point, even with the oil spike, the stock market is unimpressed.
Well, I mean, look at the difference here, the reaction function. In April, this thing lasted, 2 weeks? We start declining in March. We really crest over in that second week of April by the Ayatollah's birthday on April 19th. I only know that because Ilya and I were up watching Iranian state TV when the bombs started falling in Iran.
As one does.
They didn't hit anything sensitive. And it was
I know that you do a special celebration of the Ayatollah's birthday every year.
Every April 19th, apparently, starting in 2024. But we see this as like a 2-week thing. And then you see here in October when oil prices spike again around this is kind of like a week-long thing before we ultimately get, I would actually say, may I reverse that? In April, it took us almost a full month to get back to where we were before the panic began. And then in October, it was like a week plus 6 days. And then we erased Friday's losses here today instantly. So I think just Ilya, you talk about the benchmarking. It's kind of, I hate to minimize this, but this is what we're doing here. It's kind of like what we talked about with the 5% on the 2-year yield, how someone who first moves to Florida with their first hurricane, it's really alarming. But by the time you've lived there for 10 years, you've been through enough hurricanes to know what to expect. The 2-year, when it was bumping into 5% those years ago, the first time panicked everyone. Everyone got spooked. And then the second time it wasn't so bad. And by like the third, fourth touches, we're like, okay, we can handle a 5% 2-year yield up here. And the market's kind of telling you the same thing right now with Israel-Iran, right? Strait of Hormuz being closed or bust, I suppose, right now, until that headline crosses our screen. Dylan, I think that your hypothesis is being proved correct. I mean, not that nothing matters, but maybe nothing matters right now, except for the fact that equity bulls are just going to continue to drive this higher until something really terrible happens.
Which is why, at the end of the day, I like Ilya's long bond. I like short oil long bond for the week.
Yeah. There's one important thing looking at the price action before we kind of throw up our hands and say nothing matters.
Nothing matters, yeah.
Take a look here and realize we're not making headway versus the high that we've established, let's say, 3 sessions ago. We've erased the freak out, but that's it. We've essentially reset to what was there when U.S. inflation data came out last week. And that inflation data said, relatively benign. CPI, PPI, nothing to see here. Then, of course, nobody was paying attention to the consumer confidence data that came out on Friday because everybody was watching the missiles fall. But that consumer confidence data recorded a very significant improvement. So it was much, much better than expected. And that's largely around the 1-year inflation forecast dropping from 6.6 back to 5.1%. So back inside the high from COVID. The whole major spook in April, the major spook in May was that 1-year inflation expectations jumped to 6.6%. And The COVID high was 5.4. So it looked like the tariffs were really freaking people out. But that's not apparently where people were come the June survey. Inflation fears unclenched. So we've got this retail sales number coming up tomorrow. We've got the Fed this week. These things matter because what we're seeing is the markets have shrugged off geopolitics, but they're back to the starting line for where we were the last time we got a Fed relevant update. And that Fed relevant update said Fed probably needs to cut. And they're probably not going to. And they're probably not going to signal that they're any readier to do it. Because all of the same uncertainty that the Fed was facing in May, when they had a 90-day tariff pause cliff in early July, and another one with China in August, lots of noise here and there, but that hasn't changed. It's exactly the same thing. And there haven't been significant deals, but for a little baby one with the UK, which, let's face it, is barely in the G7 at this point, as far as the size of the economy. So when we're looking at the situation here, and by the way, also a country with which the US has a trade surplus. So not exactly a thing to fix, not exactly a huge risk for the Fed's calculus as it comes to the tariffs. So from the Fed's perspective, they have no more certainty about what this thing means for growth and inflation, but break-even rates and bond markets are telling them they need to be cutting rates because inflation is likely to be lower, not higher. That's what we saw in the data. And consumer confidence is improving largely because even consumers are starting to think, yeah, this inflation thing isn't really what the business is. It's an economic downturn that would be a concern. And so from the Fed's perspective, they're probably sitting on their hands. It certainly doesn't help that the president is goading the Fed chair again. So you're in now this weird thing where, okay, yeah, maybe the local war doesn't matter because the markets go, okay, it didn't matter last year either. On we go. But the Fed clearly matters because the markets won't make any headway beyond the last point where they had a read on it. And we have some very relevant event risk to all of it over the next 24 to 48 hours.
Dylan, you mentioned that you like bonds this week. Oil lower, bonds higher. We have a Fed decision on Wednesday. Market's not expecting a cut. What do you think about the Fed this week? It feels like it's the third, fourth, fifth most important story. And if only to emphasize that, I did pull up all three major, we'll call it Fox, CNBC, Bloomberg here, just to get a check what the average trader is looking at right now. If they turn on the news, there's nothing up here about the Fed. There's only one line item about Israel, Iran on Fox News. Bloomberg is a little bit more about Iran, but still there's nothing here on the front page about the Fed meeting this week. And same thing for CNBC. There's literally nothing up here about the Fed meeting whatsoever. It feels like the Fed is a complete afterthought in this environment.
Yeah, I mean, I was thinking about it, just reading the headlines when I woke up this morning and just sort of looking through that dynamic. My perception is not only is the Fed irrelevant, that the Fed is a foregone conclusion this week. I won't say it's irrelevant. It's a foregone conclusion this week and sort of a known. But increasingly, it's viewed as an ongoing neutral position until further notice. That sort of expectations of cuts are fading increasingly into the future in general, beyond this particular meeting. And so that the Fed is sort of becoming more, at the moment, more perceived to be just in a sort of holding pattern until further notice. The economy is strong enough, inflation is tame enough, blah, 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 which I think is part of the reason why I like the long bond position, actually.
Yeah, I mean, I think that's exactly right, because the event with this Fed announcement isn't going to be what they do. They're not going to do anything. It'll be what they say, and most importantly, what the quarterly update of the summary of economic projection says, and whether they change anything there. If they don't, which seems likely because there's still, we got these tariff cliffhangers, and just like Dylan said, the economy is strong enough. The unemployment rate is not like surging or anything like that. Inflation is coming in a way that makes sense. Everything's fine. They have all the reason in the world to assert that they're basically just going to keep doing what they're doing, which is waiting for the tariff calculus to review itself. Mm-hmm. Should they be prioritizing inflation or growth? But if they do that at a time when the market is very loudly now saying, hey, listen, it's time to cut, and the break-even rates are pointedly telling you that there is no argument as to what to prioritize in the markets. It's only an argument at the Fed, that the markets think that it's time to prioritize growth and not inflation. That's a vector for disappointing markets, especially if you consider that since the markets got the last update from the Fed, which was in early May, bonds bottomed and stocks changed their incline to basically a sideways drift. And the upshot here seems to be the markets aren't happy with the idea that the Fed is going to delay cuts because they think they should be coming, and are then pushing those cuts into the long end of the curve. So now, for example, the tally for this year and next, still 100 basis points in line with the Fed, but tilted. 42 for this year, 57 for next. So it evens out when you do the full tally, but the markets are very clearly leaning in, they'll be late, so they'll have to do more later. So if you get a Fed here that gives you the same SEP, the same wishy-washy rhetoric, there's room here for the markets to go, oh man, that's disappointing. And that ends up being a stocks lower, dollar lower, gold higher, bonds higher kind of a thing.
Today, the bonds were interesting because they were rallying all morning until we got those headlines that Iran is warning that we're going to get the largest missile strike that's occurred thus far. We have an auction today, the 20-year bond auction. Note for that first 5-minute candle, it's a complete doji. Nothing happens. You start getting the headlines again that there are missile sirens going off in Israel. There's more missile attacks coming. Oil starts moving up off the lows. And so when oil turns higher and retraces some of its losses for the day, bonds at the long end of the curve ultimately turn up. I'm very much of the mindset this week that we're looking at a Fed meeting that really doesn't matter all that much. A while back, we talked about the lawsuit that was making its way through the course regarding Humphrey's executor because Trump fired some people, I think in the NLRB and from the FTC. Either way, though, the implication there for us, for market participants, was whether or not it would invalidate the provision that effectively keeps the Fed independent. But in that Supreme Court ruling, the justices, the majority, concluded that the ruling, quote, necessarily implicates the constitutional or for-cause removal of protections for the members of the Federal Reserve's Board of Governors or other members of the Federal Open Market Committee, because the Fed Reserve is a uniquely structured quasi-private entity that follows in the distinct historical tradition of the first and second banks of the United States. So we're going to get this dance now, I think, for the next few months. Again, first time Trump says he wants to fire Powell. Scary, can't do that. Okay, he's going to keep talking about wanting a new Fed chair, but we're also 11 months away from when Powell's going to leave office. And so this process has got to start sometime soon. I don't think we should pay attention to much of that. There's going to be quarreling between the executive and the Fed the next few months. Powell's not going to give us anything this week. Probably not going to give us anything next month unless the data continues to deteriorate. Another miss on the inflation parnelia and a weaker jobs report, below expectations and more downward revisions. Maybe that makes July live. Maybe. But right now, I think that if you're, not that it's the typical tasty way, but I know there are people who like to use their macro or their worldview and lay in the tasty methodology. If I'm chasing any bond trades about the Fed cut cycle, I'm not doing anything without looking out till September. The next few months could just be really, really choppy. One way or the other.
That's right. They could be. They could be. I think there is room here for the markets, after already quite a bit of chop, to kind of settle into some kind of a bias, because they're going to have this be the last kind of meaningful update on big data and on this big story for a while. And so even if the Fed doesn't offer much that's new, it still shapes up as an important catalyst because it tells the markets, right, so this is the last thing for a while. This is your baseline. Now you decide, are you happy with this baseline or are you not happy with this baseline? And who knows what we would have done with how price action would develop on Friday last week were we not to have missiles going back and forth. But here's what we do know. Stocks had an opportunity to rally last week on supportive U.S. inflation data and on the resumption of the U.S.-China détente. They went back to London. They hashed it back out. Cooler heads prevailed. Nobody even seemed to notice that the U.S. and China are back on speaking terms. So you're in this situation where, on the one hand, yeah, bad news doesn't matter, but neither does good news, apparently.
Nothing
because
matters.
stocks are kind of drifting. Bonds are kind of drifting. Dollar is kind of drifting. The ranges are volatile, but things are kind of unhinged here from any kind of macro narrative this way or that. That's not terribly encouraging. You don't want to see things happen for no reason, because then it's very difficult to extrapolate follow through. So when you look at this, then I'm kind of looking for the Fed to be a point where the markets, if they truly don't care about the episodic stuff, if they don't care about a U.S.-China détente, if they don't care that Israel and Iran are shooting at each other, if all of that stuff is just kind of whatever, noise, more headlines, then the Fed presents you with something tangible.
Okay, but hold on. If in April things pop off between Israel and Iran, April 2024, the May 1st, 2024 FOMC statement has nothing about geopolitics, obviously nothing about Israel or Iran specifically, but that didn't move the needle. And for the sake of conversation, I'll tell you that they didn't do anything after the November meeting either, right? They have the September meeting, and then we get to November. And in the November meeting, they don't talk about
Israel. And the markets, by the way, did not like what the Fed did in May, because the Fed came out in May last year and was, woe is me, we can't cut rates, inflation isn't falling as much as we'd like.
But they said that they weren't going to hike. That was really important.
Yeah.
You went to that May 1st meeting where the market was pricing in like a 0.3% chance of a hike by the end of the year, and Powell came out and was like, listen, all you guys got to calm down. We're not hiking. Yeah. We may not cut, but that doesn't mean we're going to hike.
But then look what happened to equity markets in the middle of last year. I mean, that was the last kind of real spook.
We rallied in May, June, right? Rallied May, June last year, right? Am I going crazy here? My memory, I'm crazy. I mean, I know I am, but we rallied in May last year. May, June. It was July that really we took that ridiculous Japanese yen carry trade.
I mean, I don't think.
August.
I think it's easy to blame the unwind of the carry, but you do have to look at that thing as a symptom, because carry doesn't just unwind for random reasons.
But I wanted to play.
Much of that was the Fed is delayed.
Yeah. So one question I'm pretty sure you're going to do this with Victor tomorrow night, Elia. So I apologize for stepping on the content, but he usually does this game, for lack of a better phrase, with me if I'm on Tuesday before the Fed meeting on Wednesday. So Dylan, perhaps we could play it here together, which is to say that where do we think the Fed's going to move things? this week. And I know there's the whole Sosnoffian perspective of, even if I told you what the Fed is going to do on Wednesday, you wouldn't be able to make money on it. Okay.
Sure.
I like to have a framework for how things are going to work out. So we have our 2025 projections here.
Yes.
The top line is what was done in March. The bottom is from the previous meetings. When we get this next update, you're going to see change in real GDP for the June, and then you'll see the March projection underneath. So Dylan, I want to start with you. We have growth, unemployment, inflation here. The Fed said last meeting that we're looking at 1.7% growth for 2025, which is decelerating from 2.1% in the December forecast. Do you think the Fed is likely to upgrade or downgrade growth for the rest of 2025?
Interesting question. I'm going to say they're more likely to upgrade it.
Interesting. Ilya, a growth projection of 1.7% for this coming year. Right now, the Atlanta Fed is giving us a 3, dare I say? No, I doubt to double check that. Yeah, 3.8% GDP reading for the second quarter. The New York Fed nowcast is 2.34%. Do you think the Fed upgrades its GDP forecast here?
No, I don't. I think what's likelier to happen is a hold, but with a bias to downgrade. But I think more importantly, the central tendency, the range, is going to widen out. And that will speak to the Feds looking at this and saying there's more uncertainty around the outlook. The deeper we go, the closer we get to these tariff cliffhangers, the more uncertainty there is. The Fed very clearly said in May, they didn't have a summary of economic projections, but they came out and said risks to both growth and inflation have increased, and uncertainty around both has increased. So I think
you can see that here, by the way. You can see that in the ranges here. You like just going out in 2027, for example. That's a long ways away. I don't know why they had such a tight growth forecast to begin with, but in December it was 1.8 to 2%. So we'll call it 1.9 plus or minus a tenth. Now it's 1.6 to 2%, right? So that's
that's March.
So you're seeing, instead of like there being a 0.2% range, now it's 0.4%, and you're seeing this happen here for 2026. Instead of 0.2% range, it's lower, and now it's 0.3% range. So
and the Fed
lower
told
growth,
us that uncertainty has increased versus this now, because this is March, and the Fed told us in May that it's even more uncertain then.
Yeah, that's the mathematical expression of the uncertainty. That range is widening out, even though you're getting closer in time to where we are. You could see it here too. The range is shifting down overall. So I guess I think they're probably going to keep it on hold, because if we're looking at a rebound this quarter, and from the data that's accruing this far, even the Port of LA data, we're not seeing a significant slowdown in shipments. We've had that big spike back where we're like 40% year over year, and now the Port of LA growth is like 1.6%, 1.8% year over year, which is a more modest pace in line with what we were doing prior to the tariffs being implemented several months ago. The unemployment one is perhaps the ace in the hole here, guys, or the wild card, because if the Fed thinks that the labor market is giving out, that's when they have their justification to look through that temporary one-off rise in inflation and instead focus on the longer-term impact of what a growth downturn may look like. Dylan, I have a feeling here that if the Fed wants to signal to the market that it's getting ready to cut rates, it's going to push this unemployment rate higher. The last non-farm payrolls report, we only got a 4.2% unemployment rate because of rounding. The actual rate was 4.244%. So next month, we're likely to see 4.3. And I think if they want to indicate to the market that they're leaning in the direction of a cut, they're going to give us a 4.5 here for the year end. So Dylan, we have unemployment here. We're going to get it Wednesday. Do you think the Fed's going to feel any better or any worse, considering you just said they might even upgrade their growth forecast?
I think they'll feel better. I mean, I think the only way you get an increased growth forecast is you have inflation continue to be sort of less and less relevant, labor market stable, and I believe, as you know, that between AI and transportation, that the technology drivers for growth are more profoundly powerful than people realize.
Ilya, I think you're probably on my page. You think that they're probably going to bump up the unemployment rate here, right?
Most likely, yes. And I think this sort of speaks again to their idea that the longer the tariff saga continues without some kind of a lasting resolution, the more risk there is to both inflation being higher than expected and to growth, and by extension, the labor market, to be a weaker situation, that is a higher unemployment rate than expected. And we hear them say this constantly. Fed officials are constantly beating this drum that uncertainty has increased and risks to both objectives are rising. So it seems like they're kind of painted into a corner here where they're going to have to keep, or at least what they've done so far is they've kept the rates expectations unchanged, December to March. But how they get there has been increasingly diverging views on growth and inflation, where inflation keeps getting upgraded in the forecast, and unemployment keeps getting upgraded as well. And so the Fed is saying, okay, well, if our objectives are going into opposite directions, we're not going to change the rate forecast because we don't know which thing to prioritize. So for now, it'll just stay here.
You know, when these policymakers do these meetings, they bring forward experts, right? They're actually like individual economists who work on very specific topics within each district. But one thing that Federal Reserve policymakers listen to are the surveys from their contacts. You see it through the Beige Book, right, Ilya? You get it through the regional Fed surveys. You get these comments from each little sector or little Fed district. The National Association of Manufacturers is one of those groups that provides this information. They collect industry data and they release it publicly, and they release some publicly recent days here. What's the impact of tariffs on business? 79.7% of businesses that are members of the National Association of Manufacturers are reporting that it's increasing costs. 57.4% are saying it's dampening business growth outlook. 39.2% saying it's reducing availability of inputs or increasing the cost of inputs. Only 7.9% are saying there's no impact whatsoever. Oh, wait, 7.6% saying they're going to consider relocating operations outside the U.S. That's not good. The point here is
and
that—
by the way, it isn't just industries that are hit with tariffs directly. We've talked about this before.
Directly, indirectly.
That you're seeing these concerns pop up in the service sector surveys when the tariffs are mainly a goods sector thing. And even just anecdotally, people I'm talking to that are definitely not in a goods oriented thing. I was staying at a little bed and breakfast in Guerneville in the Russian River Valley area here, about an hour and a half north of San Francisco. A little bed and breakfast says, you know what, as soon as the tariff news hit the tape, our bookings were cut in half. People just canceled immediately. Just because it's spooking people about outlays and what things may cost downwind, and so they go, let me not go spend any money on a vacation. Let me back up here. So in this context, the retail sales numbers will be really interesting, and of course, what ultimately the Fed makes of all of this will be interesting, because the market is already telling them, and I think that's the key. The market has made up its mind. The Fed's still resisting whether they should prioritize growth or inflation, but the market has made a call. So the Fed doesn't need to do anything. They need to do nothing for the markets to be disappointed.
I mean, I would even say, going to your question, Chris, I think my speculative position is probably slightly less likely than the others. But let's say the Fed does do what I think they're going to do. I actually think that would be terrible for the market. It would basically be a signal to no rate cuts anytime soon is that kind of the worst case scenario.
Yeah. Mm-hmm.
Yes, and I think that's forget the number themselves. Like there's a message there. If the Fed were to, spike
even by a tenth of a point, that's what I'm saying. Like even less than a tenth of a point, any marginal bias on the bump in growth without increase of fear of inflation, I think would be interpreted very badly by the market.
Well, there's a message here that they tell, right? Like if the Fed were to come out and boost GDP and boost inflation and drop the unemployment rate forecast, I would think that they're expecting a booming economy. And if they cut GDP, but they sent unemployment rate higher and they sent inflation higher, I would think the Fed is having some stagflationary bent, which is what we concluded last time, because they cut growth, they boosted unemployment, they boosted inflation. There's that stagflationary flavor there. So if the Fed says that, no, this is just going to be like, the tariffs aren't a big deal. So you get unemployment going up, you get inflation on hold, maybe you get GDP higher. So it shows there's less of a tariff impact, but like it's still going to filter through. All that matters for whether or not the Fed ultimately has the lane that it's carved out for itself to have July optionality or even September optionality. And then it goes into that bigger question for stocks then for the rest of the year. Are we getting rate cuts for maintenance reasons, for recession reasons, for emergency reasons? Yep. And all those things determine the near-term path of stocks, which in fairness, last September, when we got our Fed cut, right? Okay, so that's September 18th. We're 9 months later. You got to chalk this up. 9 months later, we're higher, right? So following that path, cuts for maintenance reasons, 3 months out, 6 months out. April's a little odd. But for the most part, it's holding up in line with historical expectations that if you get cuts for maintenance reasons, the market's going to rally, and rally it has since September. I do want to pivot here one more time before we get into the end of the day, because there is one more geopolitical question I have to ask. I read a really interesting article over the weekend about how China interpreted 9/11. And their interpretation was that with American and Western eyes now preoccupied with the war on terror in the Middle East, China would have the ability to maneuver a little bit more freely as it tried to build itself up into a global power. Now, maybe this is a little bit of retroactive history writing here, but certainly if that was the plan from day one, China perhaps succeeded at that. Dylan, the U.S. is moving a second carrier group out of Southeast Asia and into the Middle East right now. If you're looking at the situation unfolding between Israel and Iran, forget the implications that China is Iran's largest customer for oil. But if you're China and you're looking at the situation in Iran, is it informing anything about what may happen with, say, Taiwan? Because it feels like Taiwan is the one thing that we never talk about geopolitically that's constantly the elephant in the room.
No, I don't buy it. I think I just don't. I don't understand. Like the cost benefit now, the Taiwan is, at least here's my perception. Taiwan for China is not that much of a problem. But making a move on Taiwan, if you're China, makes Taiwan a much bigger problem for China than it is in its current condition.
A huge problem.
Huge. And to what benefit?
Doesn't
moral
do anything.
Political benefit. It's basically some sort of empty moral political benefit of some sort of rhetorical aspiration to reunification.
Versus how much more does Taiwan do if you don't invade but threaten to invade and have that in your back pocket all the time and go, hey, you better not get chippy. I might invade Taiwan.
And you don't make yourself totally alienated from the global community. You know, China's position right now is really great, actually, politically, on the global stage. In part because of some of the benefits of the sort of U.S. focus on Russia. I think that the Biden focus on Russia as the enemy of choice was misguided relative to the threat of China. And I think that all the ongoing activity and everything benefits China, even though I know China got sort of in the crosshairs of the Trumpian tariff rhetoric. But even that proved to be largely rhetorical, and there's some financial consequences there, but it's on the margin at the end of the day, especially for China. So I just don't. I don't think it has anything to do with focus, not focus, this, that. I just don't fundamentally understand what reason China would have to do that.
Let's give the devil his due for one moment here and consider that at least one compelling argument for why Russia did what they did in Ukraine, which incidentally I didn't think that they would follow through on to this kind of an extent, because again, the calculus makes absolutely no sense. But at least in Russia, there is a sense that the demographic situation is so dire that if you were going to make a move on Ukraine, you kind of had to do it when Russia did it, because otherwise you're just not going to have the able-bodied soldiers to make any move if you wait, let's say, 10 years longer. It is also a dire situation demographically in China. And so I suppose you could say, well, if China was ever going to really make good on this Taiwan thing, they would have to do it at a time when they have the manpower and everybody's not 50 years old and unable